as far as India is concerned, or in markets are concerned from oil prices. It's been a mixed opening for Asia. Surprise cut by Bank of Korea in rates, but that was not penciled in, so 25 basis points down there. We should see if we can pull up the Kospi because we saw a bit of a rise there, but meanwhile, mixed flow there. Fund flows, interesting figure. So foreign investors have bought for the third day in a row at a princely amount of 7.8 crores net, but domestic investors were also buyers, about 1,300 crores. So at least trend-wise, you've seen a decent move there from foreign investors for 3 days, if you count that 8 crores coming in. So not half bad. I'll pull up the implied open very quickly before we get to what the day yesterday looked like. So yeah, you're looking at a flat to positive start. Not bad. Can't complain too much.
Yeah, I thought the BOK decision was interesting simply because for a central bank which is, or for a nation which is grappling with growth, the central bank coming out and saying that yes, there will be a possible trade war induced slowdown. So independent of what the Fed will do, let's go ahead and cut rates and be preemptive in this in some sense. Is an interesting stance taken at a point of time when the Fed is expected to hike rates. So it'll be interesting to see what some of the other large central banks also do, especially in the Asian region, which might get impacted with this trade war. So possible trade wars, let me put it that way. So it's a very interesting decision by BOK. Only 4 out of the 40 economists polled actually thought that there will be a cut. It's quite interesting what they've done.
What that tells me is the Bank of Korea is taking Trump more seriously than the Federal Reserve right now, or the US markets, because no one's sure if saying that I will tax everything coming in from China at 60% is bluster, or he's actually going to do it. BOK is not taking chances. They've gone ahead and done their first rate cut. But yeah, so that's the global macro picture. But what a day of trade yesterday, Samina, and so many ups and downs.
But finally ended flat, almost flat rather. So it's been consolidating for the last 3 days. We've played a tight range for whatever it's worth. So we consolidated as expected with a positive bias. The range for the last few days has been 24,100 on the downside and 24,350 zone. So that's pretty much where the bulls and bears have been fighting it out. On the higher side, 24,550 becomes an important target to watch. Once that gets successfully taken out, you could potentially head to levels of 24,700. On the downside, yes, Neeraj, 23,500 now seems far away. We're sitting on 24,100, which will be an important sort of level of support that would come in for the bulls. A couple of standouts, a Nifty put-call ratio, which usually indicates the mood in the market actually went up, rose to 1.12. This means that the sentiment is turning a lot more bullish and constructive. So a put-call ratio above 1 indicates an improving bull sort of sentiment on the street. The other positive was the VIX that has been elevated for most part of October and November actually eased, and it closed below levels of 15. Now this is big comfort coming in if you're a bullish trader on the street. 5% off on the India VIX is what we had in trade yesterday. What happened, like I said, it was a mixed day of trade. Pharma and real estate declined, while energy stocks actually gained about 1.5%. The day belonged to Adani stocks, and it's been a whipsaw for the last few days, but finally finding their feet, low-level buying emerging, and the counters gained significantly. In fact, I think the two Adani twins were the key contributors and helped the Nifty actually close higher in trade yesterday. Along with that was also HDFC Bank. We can't take away credit from the banking major. The stock managed to do well, up about 1.5%. It was the star in terms of the fact that Bank Nifty itself didn't do very much in yesterday's trade. Again, Bank Nifty, just like the index, went home flat with not too much to talk about. But of course, what you want to keep in mind is 52,200 is an important sort of mark for traders on Bank Nifty. And what most people have told us is that if you're looking to initiate trading positions, the direction is a lot more clearer on Bank Nifty. Today is your expiry, so the markets will turn very volatile in the second half of trade, but it's not something that we're not used to or aware of. Ola Electric was quite the star yesterday, hit upper circuit in the session on back of new launches and a brokerage note that came in. And it was NTPC Green that debuted on the exchanges And what a welcome. It started off flat. The excitement was not there before the counter listed. The grey market premium was indicating to a 1 to 3% gap up, which is where the counter opened, but finally went home with a pretty significant up move of 12.5%. So all in all, I don't think anyone was complaining in trade yesterday. I think the big question to ask is, if you do get a flat start this morning, should you initiate fresh longs? I mean, I do think we should, with a strict stop loss of 23,800, 24,000, go long for December and wait and watch.
Yeah, there were so many analysis done, right? That in December, typically Santa Claus
Sell
rally,
and go away.
etc. And there are actually, maybe tomorrow we should do this, that in the December series, whenever this has happened in a Santa Claus rally, how many years has Nifty outperformed, underperformed, and what are the stocks that have typically done this or done that? Because I saw some data out there, but...
the only thing is, I think in December, after 15th of December, most people in the US go off. So flows come off.
Cool if FI outflows go away.
They've taken a pause. They've taken a pause for now. But I mean, we are anyway domestic liquidity driven market for now, for all practical purposes.
Should be doing Thanksgiving too, right? It's been a good year.
yeah, most certainly. So, I mean, it does seem that the fears of 23,500 are behind, with upsides likely. I think a lot of people are betting on that. I was in a city in Gujarat wherein I spoke to a few local brokerages yesterday, and they seem to believe that 23,500 now is at least the fear and the hump is out of the way. But I mean, yes, people are talking about a couple of FI flows, but as Tamanna highlighted as well, a princely sum yesterday, 7 crores. So I think it's very difficult to call this small uptick that we see in the last few days as a trend. If anything, people like Neelkanth Mishra also said that won't be surprised if the FI selling continues well until end November, maybe early part of December as well. So that's to be kept in mind. And therefore, look at pockets. If the Nifty kind of even stagnates or consolidates, if you will, whichever way you want to think of it, then it could mean that there is stock-specific activity out there. And one of the pockets that seems to be a bit of a math brainer is Mumbai or Maharashtra-based infrastructure names, right? The state releasing a vision of $1 trillion economy by 2030. That typically means a 14% CAGR just by the arithmetic. And for a 14% economic CAGR to happen, if you believe that this might happen, let's say, right? Then you have to bet on infra, because infra spends will happen. And if that has to happen, some of these Maharashtra-based infrastructure companies could be looked at. And the street is looking at it, select HNI circles are looking at it. Not a bad pocket to be in.
Can I just add one bit on Maharashtra that would be interesting from a market's perspective for everyone to see? You will probably hear the Chief Minister's name today. And that will be a big driver. It's pretty clear that it's going to be from the BJP, because sitting Chief Minister Eknath Shinde's press conference yesterday, where he said that, you know, we have fought together and I'm completely with the BJP and I leave the decision to Prime Minister Modi and Home Minister Amit Shah, at least puts at bay any concerns that there will be a tussle internally. So who will be the next chief minister? Will it be a BJP minister, BJP face, and will it be Devendra Fadnavis? All of these will also come in, and if you have all of the above, I would suspect it would be sentimentally very, very positive for the markets. Could happen during trading, could happen afterwards. So the latest that I hear is that the three have not yet left Mumbai to head to Delhi. That is Mr. Ajit Pawar, Devendra Fadnavis, and Eknath Shinde. But they will, and then, you know, you could have an announcement anytime. So,
just to add to what Neeraj said, so I think the stocks that you want to watch out for, which have a significant allocation coming in from Maharashtra, becomes your JK Kumar Infra, HE Infra, Ashok Bilkon, Welspun Industries. All of them become key sort of beneficiaries if there is no delay in orders that were stuck awaiting clarity out of Maharashtra elections. In fact, Ashok Bilkon has already been winning orders over the last few days, not necessarily from the Maharashtra government, but nevertheless worth a mention. Also, talking about Maharashtra, yesterday, NTPC Green struck a joint venture with the Maharashtra State Power Generation. I'm guessing this was in the offing, but with clarity now emerging of what the state is going to have for the next 5 years, lots and lots of action that's been picking up.
The likes of Concor, for example, for the JNPT terminal now finally maybe seeing a green light, you know, all of that, a lot of port development projects. So some interesting
Afcons
times
too,
ahead.
So Afcons as well. Also, and I think I would go a little more step further and say it's not just going to be those trades. You weren't here, Neeraj, but from Monday, the theme became Modi picks. So everything and anything was an easy buy for the last few years. Those stocks are now down 40 to 50%, right? So anything in defense, shipyard, fertilizer, sugar, that seems to be the simple theme. You buy these stocks and they've done okay. Even though Pramod Guppi did tell us yesterday that while he's concerned about valuations in some of these PSU stocks, railways and defense still have come back in style for some reason, of course, on back of what happened in Mumbai, Maharashtra, and the state elections. But let's take you through what's on our radar this morning. You'll have a bunch of counters, lots of counters, and it's all about order win for a whole bunch of them. But just before I go into order win stocks, Godrej Properties becomes an interesting one to track. They launched their QIP today at an issue price of 2,727 apiece. Now this is at a 5% discount to yesterday's close. So just like we've seen with every other stock that comes in with the QIP, if there is a discount, the stock corrects significantly to match that price. So what you are expecting is a correction on the counter in today's day of trade on back of that QIP. The other few that I've got is KEC. It's a pretty significant order that they've won from Power Grid. Remember, this was also in the news in the early part of this week, on back of an order win from Power Grid. So Power Grid seems to be in the mood of giving out and doling out orders from what we understand. The order secured is big. It's 1,704 crores. Their current order intake for the year is 16,300 crores. So on track to achieve the guidance that the company has set out. Well, apart from that, you've also got Vari Renewables. They've managed to bag a pretty big order. Now, this one also moves quite well in terms of order news flow. It's for a solar PV project, which is worth about 1,233 crores. So 2 order wins and 1 QIP. So 2 stocks up, 1 stock down.
Okay, what's on my list? Let me start with Hutco and NBCC. So, yeah, more about CAPEX and CAPEX-focused ideas, I suppose. Hutco signed a memorandum of understanding with NBCC for the development of Noida's land parcel of 10 acres owned by Hutco. NBCC will be executing the project at a tentative cost of 600 crores. Thumbs up for both those counters. PCBL, Philips Carbon Black, is an interesting company in terms of the kind of up move it has had, even I would say in the last 12 months. The Andhra Pradesh government has allotted a 116-acre land parcel to the company for their chemical unit, which they are going to set up in the state at an investment of 3,718 crore rupees. So look at that as a thumbs up as well. Sonata Software, meanwhile, has received a multi-million-dollar modernization deal in Australia. They've not given the deal size, but typically you don't get that information coming in. We do know that the client is a global company and will integrate, so their task is to integrate and standardize the client's business processes across 13 countries. The deal was secured in the first quarter of FY25. They did also say on their earnings call that they've won 3 large deals already in Q2 FY25. So watch out for Sonata, along with, I think, tech stocks in view overall as well.
Okay, not from a news flow perspective, 2 that caught my eye. One of them is Sonata Software. It's a thumbs up, you just highlighted, but the problem with these ones that the size will never be known. Shelly Engineering Plastic is an interesting one. Motilal Oswal Mutual Fund bought about 2.33 lakh shares, which is about 0.5% at 1251.69 rupees per share. The reason why this is important is not that they've bought 0.5% stake, but because they've topped up this. They bought earlier at about 750, 800, a very large stake, maybe over 5% if I'm not wrong, or somewhere around that size. For them to come out and purchase again about 40% higher probably means some more confidence. Not that you should go out and do a blind buy into what a mutual fund might be doing, but it should mean that there is research to be done here, and maybe the stock reacts today. I was trying to look at what the numbers, etc., could be like. 100 to 120 crore of PAT visibility. There is the opportunity of the GLP-1 post that the injections that Shelly Engineering Plastics is doing. Apparently in talks with Apple and some other global companies as well. There's one of the key suppliers to IKEA. So clearly this business is doing something remarkable. 18% up yesterday. Let's see if there is more in store there. So that's something I would watch out for. I thought the Citi note on Emphasis was interesting, that the management is highlighting that FY25 will be better than FY24 and FY26 is better than FY25. So since we spoke about how all tech could be in focus, watch out for Emphasis individually as well. And just one last thing on my list is aviation. There is some talk of a mega aviation package soon to cut levies and ease rules. If all of that comes in, may help the sentiment around SpiceJet and Interglobe. So that's something you want to keep an eye out for.
Just to add one more to it, rather small, but I think worth the mention is Natco Pharma. This is non-core revenue that is going to be hitting their books. So, of course, good news coming in for Natco Pharma. They've sold non-core assets, a land parcel, 14.5 acres, which converts into about 73,000 square feet of their land bank, which is located in Telangana. And they've sold it for a very healthy sum of about 116 crores. Now, I'm not sure whether this was part of their quarter plan to shed some of the non-core assets they have. But for now, I'm assuming this should be viewed as a positive, giving a lot more sort of depth to the company in terms of their balance sheet. Talking about land banks and non-core activities, ZF Commercial, promoter WAPCO, that's of course a block deal that I'm talking about, has sold a significant stake of 4.3% in the company. So that stock is another one you want to track this morning. But yeah, I think this land parcel does stand out in my opinion.
Just what I would add before we get to Mihika on an interesting note on retail stocks is look out for auto again. I don't think the auto buzz is quite done. There is a fresh set of notes out this morning on Mahindra and Mahindra, and all of the excitement around their SUV EV launch. Ola as well was on a 20% upper circuit yesterday, but a reiteration has come again this morning on a Citi note on how peers don't have this category of vehicle, which is focused completely on gig workers. And we're going to have a deep dive on this at 9:40 this morning as well, where we focus on whether we have now reached that paradigm shift that EV needs. That is the inflection point where you have a wider adoption of electric vehicles in India or not. But meanwhile, Nuvama has also come out with a note on consumer durable space. The brokerage has initiated a buy rating on Electronic Mart and Aditya Vision. Mehika is joining us to tell us more.
Good morning, Tamanna. So they have initiated coverage on these two consumer durable counters, and they are actually both competitors to each other, but they have pursued diversion but effective growth strategies. And Nuvama highlights how both their strategies are in non-overlapping markets. Up first, let's talk about Electronic Mart India. They've initiated coverage with a buy with a target price of 237, which implies a 38% upside. Now, they expect the company's revenues, EBITDA and net profit to grow at a 21%. 20%, 18% CAGR over FY24 to FY27. What's working for Electronic Mart? Well, they're scaling in the Delhi NCR region, which is one of the most high consuming regions for ACs, and their robust cash flows in other states like Telangana and Andhra Pradesh allow the company to execute their NCR strategy. They're also targeting a larger market over a longer investment horizon, which Nuvama likes, and they've stated that the company's proven its ability to squeeze out maximum profits from a lower sales throughput. Then we have Aditya Vision, when Nuvama has initiated coverage with a buy rating as well, a 672 rupee target, which implies a 36% upside. Now, they expect the company's revenues, EBITDA and net profit to grow at a 28%, 30% and 41% CAGR over the same period of FY24 to FY27. What's working for Aditya Vision is one, the rising electrification in tier 2 cities and below tier towns. The company is also replicating a very successful business model that it followed through in Bihar and other states, and they're also expanding their pool of financing options. And lastly, Nuvama highlights how the company has better unit economies when you compare to other small store retailers, which gives the company an edge in the market.
Okay.
Okay, Mehika, hey, thanks, yeah, thanks for that. So, interesting names out there, and Aditya Vision, interesting retail thing, and something that a lot of people will watch out for, because it's not a stock that's not done well. If you just look at the last 5-year chart, for example, Aditya Vision has certainly zoomed. So people have actually made money out there over the last 5 years. And then, I mean, this is a stock split related pullback, but look at the chart. It just tells you a story of how well the stock has done. So it's a stock that's really gained quite a bit. but they are expanding meaningfully in an area which is not competitive, right? Because of the online preference for electronics, if you will, and the presence of Chroma and Reliance Retail and others. But well, let's wait and watch if that particular state expertise and then some expansion out there helps them. Nomura believes certainly so. Okay, so speaking of stock zooming, M&M is a stock that certainly zoomed, and you call 9% a zoom simply because a lot of other auto stocks haven't quite done that. The stock has nearly doubled in a year as well. So what's aiding the growth, and is this sustainable? A deep dive on Mahindra and Mahindra. Hiral, good morning. A lot of people will be interested in knowing about this.
Absolutely. If you see in terms of M&M and the stock price performance, yes, 9% in the last 1 month, nearly doubled if you see in terms of the last 1 year as well. But let's just compare M&M with regards to the other auto companies. If you see M&M in the last 1 month, that's the only company which has gained around 10.5 to 11%, whereas if you see Maruti, Tata Motors, Bajaj Auto, all of them have declined. Hyundai, which is a new entry, 3.5% is the kind of up move. Similarly, from a 6-month perspective as well, an outperformer. 1 year, again, doubled as we mentioned nearly, and 5 years 456%, that's nearly 5.5 times. None of the other auto companies have given these kind of returns, and that clearly gives you a picture of what's happening in terms of the stock price performance. But let's quickly look at what's aiding this kind of growth, because if you see in terms of the growth specifically from volume terms, strong numbers coming in there. If you see the volume mix, the automotive part, that's seeing a significant increase. From 61%, it's gone up to 69%. And to be noted that automotive as a division is a high margin division as well. If you see in terms of volume revenues as well, the largest in terms of revenues from an automaker that we're looking at, 4.48 lakh crores is what we've seen, and it's now come to 9.88. Again, the revenues have also doubled for an M&M. Moving from there on, now what is it that is aiding growth? Firstly, the positioned EV offerings that they have against, they've positioned their EV offerings to the top luxury car makers. That's one of the reasons that we will see that uptick that will come in. The pricing is absolutely competitive with regards to where EV goes. Thirdly, if you go to see in terms of the waiting period, that has seen a significant downtick, and the demand for SUV, as we know, has always been really strong, right? And this is one of the major reasons. Moving on, if you see in terms of operational enhancements that they've done, that is what is leading to this kind of growth, and the strategic foresight that they have in terms of scaling manufacturing capacity, capabilities. Because overall, if you go to see, capacity was a major constraint for M&M. Waiting periods used to go probably into 17, 18, 20 months as well for few of their models, and that has come down now. If you see SUV sales, as we are talking about the demand as well, in October 24, 54,500 units is what they sold, whereas it's come up from 40,254 in just this year. So that's what is driving growth. Talking about capacity addition, monthly they had a capacity of 19,000 units in 2020. They bumped it up to 49,000 units in this year, and now they're targeting 64,000 units monthly in 25, and in 26, 72,000 is the number that they're looking at. Plus, if you see, in addition, what the capacity are they going to see? EVs is going to be probably 10,000 units per month by March 25. So that's the kind of growth that they are anticipating as well. Back of which, if you talk about brokerages, Morgan Stanley, Nuvama, Motilal Oswal, all of them have an overweight. Target prices ranging between 3,336 to a 3,420. So that's the view of the brokerages as well. But very lastly, what are we going to watch out for from here on? Now, will Mahindra XUV 9e be a challenger to luxury electric cars, right? Because that is going to be a key from here on, because they are betting really big on EV. 2, whether they are able to meet their capacity addition plans as well, because if that does not happen, your sales will again slow down in the SUV space. And thirdly, how much further can M&M reduce the waiting period for the SUV? So these are key things investors should be watching out for. Brokerages so far, with what the management has said and the performance, have been absolutely upbeat.
For that, Hiral, it is the fastest growing company with about 15 to 17% volume growth, especially at a time when most other auto companies have been faltering. Even in terms of tractor demand for M&M, there's been a bounce back on back of a very healthy monsoon that the rural part of the country has seen. But while we are discussing M&M and the outlook for that, Hiral of course highlighted what you want to watch out for and why this has been such a significant wealth creator for investors. Let's also hear out a view coming in from M&M's Rajesh Jujurkar, who talks about M&M's big EV pair and capacity expansion plans. Let's hear him out.
We just thought, the Born Electric was more an internal terminology as we started thinking of what's the best way to express this to customers. We believe electric origin is much easier for everyone to understand. It's like, okay, this originated as an electric. It is not a carryover of anything. It's a new skateboard which is completely flat. The battery goes on it, so you release a lot of space. You are able to optimize performance fully. So it's really electric origin. So that's really a more customer-friendly expression of what it is. Okay. And I believe has enabled to enjoy the donuts the way you did.
All right, thank you. So let's talk about the new company, the Mahindra Electric Automobile Limited, which is going to sit under the Mahindra umbrella. How are the numbers going to be reported for this particular business?
Yeah, so Tushar, just for investors and media to understand our numbers better, we will report our ICE numbers and EV numbers separate. So it's very clear, you can see the margins for ICE products as different than EVs. One of the reasons, apart from the fact that they're different legal entities, is that the EV margin is not comparable to ICE. And the reason for that is the EVs have a different denominator, which is higher than for ICE because the taxation is different. Mm-hmm. So any time you compare the two as a percentage, EV is going to be lower than ICE because because of the difference in taxation. Mm-hmm. We believe that over a period of time, the unit margin, not the percentage margin, will come to the ICE levels.
Okay. Any timeline when you intend to turn EBITDA positive for the EV business?
Clearly, we can't give a guidance on that, but you've seen our track record of delivering good margins and good performance, and we'll hope to live up to your expectations.
Okay. You talked about how the EV piece of the business as well as the ICE piece of the business are separate, so definitely separate set of numbers for both of them. Are you also... there have been issues or actually questions always raised upon cannibalization, especially given how the pricing of these BE6 and as well as the XEV9E has been. So is there a risk of cannibalization? You're undercutting your EV rivals, but it's very comparable to, say, an XUV700 or a Scorpio N?
So we've not priced ourselves looking at our EV rivals. Mm-hmm. We priced ourselves at thinking about how will we create an attractive proposition for someone who wants to buy a product like this, which is really awesome on performance, technology, ride quality, noise levels. You spoke about the sound music system, which is really, really an experience by itself. Now the point is, if we give all of that and we price it at a level at which customers can't access it, then all the innovation is wasted. Yeah. Innovation is meaningful when you are able to make it accessible to people, and that's what we're trying to do. Mm-hmm. So we haven't looked at EV rivals.
Okay, so that was the big focus on M&M. We're talking about the other big story, which is a political story, but something that the market will be keeping a close eye on Kaun Banega Mukhyamantri. And we're seeing this in the context of the Maharashtra state. Now, we're learning from sources to NDTV India, our sister channel, that Eknath Shinde is set to get 3 important portfolios: Ministry of Urban Development, Public Works and Water Resources in the Maharashtra cabinet. NDTV's Ram Rajesh Shinde joins us with more. Ram Rajesh, तो इससे हम ये समझे कि मुख्यमंत्री का पद बीजेपी के पास जा रहा है?
जी बिल्कुल, अब लगभग ये तय हुआ है कि मुख्यमंत्री का पद बीजेपी के पास जा रहा है और एकनाथ शिंदे अगर अपना सीएम पोस्ट सैक्रिफाइस करते हैं तो उसके बदले में क्या लेंगे, ये भी कल तय हुआ है। बार्गेनिंग की गई है एकनाथ शिंदे की तरफ से और 3 जो बड़े पोर्टफोलियो है, जो मिनिस्ट्री है, वो अपने पास एकनाथ शिंदे रखेंगे और उसके लिए बीजेपी हाई कमांड भी तैयार हो गई है। एकनाथ शिंदे की ये बातें मान ली गई है। 3 इंपॉर्टेंट ये पोर्टफोलियो है। फर्स्ट, अर्बन डेवलपमेंट, जो कि महाराष्ट्र में बहुत ही इंपॉर्टेंट मिनिस्ट्री है। सेकंड, पीडब्ल्यूडी, जितने भी रास्ते के काम चल रहे हैं या फिर वर्क चल रहा है, कंस्ट्रक्शन चल रहा है, वो पूरा इसके अंदर आ जाएगा, पीडब्ल्यूडी। एंड थर्ड जो है वो इरिगेशन मिनिस्ट्री होगी। तो ये 3 मिनिस्ट्री जो है वो बड़ी मिनिस्ट्री है जो एकनाथ शिंदे अपने पास रखेंगे। और इसका दूसरा कारण ये बताया जा रहा है कि बीजेपी की तरफ से ये 2 मिनिस्ट्री दी गई है, क्योंकि पीडब्ल्यूडी और इरिगेशन बीजेपी की तरफ ही थी। अजीत पवार की तरफ से ये मिनिस्ट्री नहीं दी गई है और बीजेपी बड़ा भाई है, बीजेपी को मुख्यमंत्री पद मिल रहा है, इसलिए बीजेपी के खाते की जो कोटा से जो 2 मिनिस्ट्री है वो अब एकनाथ शिंदे को दी जाने वाली है। लास्ट टाइम जो है एकनाथ शिंदे के साथ 42 एमएलए थे, इस बार 56 एमएलए हो गए हैं। तो इसलिए 6 एमएलए के पीछे 1 मिनिस्ट्री दी जाएगी। पिछली सरकार में जितनी मिनिस्ट्री थी उसके अलावा ये जो मिनिस्ट्री है वो ऐड की गई है।
बताइए कि बीजेपी का मुख्यमंत्री बनेगा, ये लगभग तय है क्या? ये भी लगभग तय है कि देवेंद्र फडणवीस ही अगले मुख्यमंत्री बन सकते हैं?
जी बिल्कुल, लगभग ये तय हुआ है कि देवेंद्र फडणवीस ही अगले मुख्यमंत्री महाराष्ट्र के होंगे। और इसका कारण भी जो है वो बताया जा रहा है। कल रात को ही एक मीटिंग हो गई थी विनोद तावड़े और अमित शाह जी से, तो उसमें मराठा वोटर के ऊपर क्या असर होगा इस बारे में मीटिंग हो गई। और इस मीटिंग से ये निकला है कि अगर देवेंद्र फडणवीस सीएम बनते हैं, ब्राह्मण चेहरा अगर दिया जाता है, तो इसका असर मराठा मतदाताओं के ऊपर नहीं होगा, मराठा वोटर पे नहीं होगा। क्योंकि आने वाले जो बीएमसी के चुनाव है, म्युनिसिपल के चुनाव है, 16 म्युनिसिपल के चुनाव है और जिला परिषद के चुनाव है, ये लोकल बॉडी इलेक्शन है और उसमें कास्ट फैक्टर इंपॉर्टेंट रहता है। लेकिन बीजेपी की चर्चा से ये निकला गया है कि देवेंद्र फडणवीस अगर सीएम रहते हैं तो कोई भी असर असर नहीं होगा और इसके ऊपर सहमतियां बन गई है।
बहुत बहुत शुक्रिया राम शिंदे हमसे बात करने के लिए। दैट वाज माय कॉलीग फ्रॉम एनडीटीवी इंडिया टॉकिंग अबाउट ऑल ऑफ द political developments and perhaps something that the market also watches very closely. But Agam joining us now for the FNOQs for the day on the expiry day, Agam.
Yes, well, the first monthly expiry coming through for the Nifty. It's not really a first one, but well, after we've done away with the weeklies. So, well, it's still going to be an exciting one because you also see a lot of stocks being seeing expiration too. That said, it was a day of consolidation yesterday. We did see indices end in the green, and well, at least as far as the Nifty rollers are concerned, it's still sub 50%, but this number could be well higher than about 65-70%, and under those circumstances, it could potentially be considered as a relatively stronger rollover, especially given the kind of volatility that we've seen even in the month of November. But the Bank Nifty, of course, we've already moved into a new expiry, so the December futures come into play right now, and along with that, we see a sharp increase in open interest as well, even as the index advances marginally. Now, today, of course, is also the weekly options where we're going to see an expiration today. Based on that, we're seeing about a 500-point range, and this is only based on your open interest in options, which is where we're seeing a little bit of a base formation around 24,000. That's where we see 24,000 puts being activated, and on the higher end, we're seeing, well, 24,500, whereas there's a little bit of call writing coming through out there. Overall, well, it's been one of those days where consolidation continues, but the question really is, once we're done with this phase of consolidation, well, where do we go? Well, to answer that, we have Milan Vaishnav of Gemstone Equity Research, who joins us on the show right now. Good morning, Milan, and thanks for joining in. The way forward for you in the markets, what are you doing now?
Yeah, very good morning. Way forward for the markets, I'll take both a very short-term view as well as a little bit of longer view on the markets. Over the past 3 sessions, we are seeing 23,350 being resisted, and therefore today as well, I expect that level to offer resistance to the markets. That is point one. Number two, we are also heading into monthly derivative expiry, so it's by and far obvious that we will see the session staying influenced by the rollover-centric activities. So overall, looking at the OI for expiry that is happening today, as well as for the 5th of December, 5th or 6th, that's different.
Okay, I believe we have a little bit of a patchy line when it comes to Milan, so we'll try and reconnect with him. But for now, as I was mentioning, what we are watching out for is 25,000 and thereabouts. At least, well, that's much on the higher end. So at the moment, the implied in Nifty is indicating a marginally, marginally up move. But the question really is that can we sustain this bout of consolidation that we've seen over the past 2 to 3 sessions, and this is following a sharp improvement in the way the structure of the market has panned out. And do remember that when it comes to the market breadth as well, it's been quite favorable, in fact, over the past couple of days. In fact, we have about maybe three to 2 gainers for every 1 loser right now, and the broader markets, of course, are giving their own support as well. Well, in general, the markets are certainly looking up, and the question really is that from here on, firstly, when do we start seeing a direction when it comes to the benchmark indices? And secondly, if we do see a direction, which way will it be? That's a question that should be answered for you over the course of the next few days. But with that, it's back to you all.
Thank you, Agam, for that. Yes, the setup does look a lot more constructive. Remember, the PCR as well is slightly higher. Volatility is eased off, and we seem to be heading all the way to 24,500, followed by 24,700 over the course of the probably December series. But the general advice is this is a mini risk-on rally, so you want to initiate fresh longs at every dip. We've very swiftly gone from sell the rally to buy the dip, at least in terms of a trading rally that the markets are currently seeing. The Nifty on implied is indicating to flat to slightly higher start. We'll take a break, we'll come back, track pre-open, and then go into market opening, so stay tuned.
Outlook seems positive. Any chance you looked at it?
No, Neeraj, so don't have an in-depth study on this stock, so will not be able to comment on it.
Okay, but maybe Shrikant, you can look at the charts once for us. Shelly Engineering Plastics was up 18% yesterday.
Yeah, technically it is showing a lot of strength. In fact, it is into maybe I can say a very strong bull run. Whenever there is a correction in the stock, it is not breaking its previous swing based on weekly, monthly charts. I'm going to say on long-term charts, and it consolidates and then it breaks on the upward side, which clearly indicates that the stock is into uptrend and it is heading higher. Yesterday we saw, as you said, rally of 18%. So if there is any correction, then close to important supports like 1250 or 1260. There we should look for taking some short-term bets. But broadly, I'm of the view that if there is any specific investment or like somebody is really interested in buying this particular stock with a medium to long-term view, then certainly they should look for doing that, because the stock is finally heading for the levels of 1500 or maybe 1550 in the near term.
So you talked about Bank Nifty, but I don't think we mentioned HDFC Bank. If the stock gets a flat open this week, would you be inclined to initiate a long on HDFC Bank? And also, assuming the likes of an ICICI or Kotak or even an SBI may play catch-up, if one wants to avoid a trade on the index, could any of these banking names become trading ideas for the day?
Yeah, HDFC Bank looks really strong candidate to buy for short-term as well as with a medium-term view. It has been consolidating within the range of 1800 and 1650, 1700 on the downside, and eventually it has broke that level and it is now comfortably sustaining about the same. So based on technical formation, I'm expecting stock to move towards 1930, 1950 sort of levels, and in the near term, very near term, we can even see the levels of maybe 1880. So it's a buy at current levels with a stop loss close to 1780. For State Bank of India, there also I am expecting some bullish consolidation sort of formation. Although it is still in the range, it has not broken the level of 865, 870, which is the breakout level. But in case if there is any correction around 820, 825, certainly we should look for taking some long bets on State Bank of India. We also like ICICI Bank, we like Axis Bank. Broadly, I am of the view that from the financial space, banks should be on the watch list for taking any short-term or long-term bets.
And private banks among them also seem to be preferred. But let's shift focus for a second to an FMCG major. The Colgate investor meet took place, and a couple of notes out this morning, some of them very positive on Colgate-Palmolive. Mahima's joining us for all of those details. Mahima, what's the view coming in on Colgate-Palmolive?
Right, Tamanna. So before I jump to the views from the brokerages, a few key takeaways from the investors meet. Well, the management has said that they will be focusing on driving volume growth with strategic pricing. So it will be a mix of volume as well as pricing growth, and the focus remains on driving the urban consumption overall. Management has target keeping margin within the historical range, so no change there. And they will drive premium as a percentage of oral care portfolio from currently 14% to 25%. And what they're saying is that quick commerce for Colgate, the market share and margins is very accretive, and they've launched an AI-enabled oral care movement which will kind of augur growth for the urban consumption. Lastly, they've proactively diversified via palm olive and seeing a strong double-digit growth going forward. Now, in terms of what brokerages are saying about the investors meet takeaway, Citi has retained sale with a target price of 3,000, but they believe that the driving consumer behaving change could be a tall task, and what they're saying is that near-term aspects of earning growths will be moderate for Colgate. Jefferies on Colgate has on the other side retained buy with a target price of 3,570, which is an upside of 21%. Oral care per capita opportunity is high, which is why they are banking on the growth. MK on Colgate has reduced with a target price of 3,000 again, and they believe that valuations factor is superior in terms of execution in the oral care. Lastly, Nuvama has maintained an anti-consensus buy on Colgate with a target price of 3,825, which is a 27% upside from its yesterday's closing. And what they're saying is that Colgate shall remain in top tier in terms of volume growth. So this is the overall view and the key takeaways from the analyst meet of Colgate-Palmolive.
That's what Colgate, and that is the reason why Colgate will be in focus on back of that analyst meet. Shrikant, a couple of other stocks that we'd like to talk to you about, and maybe you want to have a go. Godrej Properties, I'll add Trent to that list because it was showing some signs of strength or recovery in the last week of trade, and it seems to be quite the favorite in terms of trader interest. And let's throw in Colgate because that's in the news this morning on back of the analyst meet. So technically on the charts.
Like technically, Godrej Properties is like something which is indicating us that it is correcting from the highs. We may see some more correction, maybe close to 2,750 or 2,700. But the overall pattern is suggesting us that it is like something which is going to consolidate for the time being. The range in which the stock can trade is between 3,050 and 2,700 or 2,750 on the downside. So in case today, if we see the stock is dropping to 2,700 or 2,750, we should look for taking some long bets. But at the same time, on the higher side, the upside also limited, close to 3,000, 3,050. So it's a range-bound stock. For Colpal, there we are expecting further more upside. It is into breakout mode. The stock displayed very strong run-up since the beginning of 2023. It was around some 1400 levels. From there all the way it moved to the levels of 3800 without any meaningful correction on monthly basis, weekly basis. And now, like when there was like a correction in the market and in the FMCG sector, we saw stock was correcting from the highs of 3800 to almost 2700. So now it is into strong pullback mode, and furthermore upside is very clearly visible. If there are like any investments, then just hold on to it. I'm expecting stock to move towards 3,300 or 3,200 in the near term, and maybe a best case scenario. In the best case scenario, the stock can move towards 3,500. So certainly it's a buy if there is any correction. But for trading, I think it is better to stay away because the overall sector is going to remain under a lot of uncertainties. So it is better if there is any correction to buy.
Okay, first pre-open rates, and of course we'll wait for them to settle, but trend-wise, what are we seeing? Adani Pack is opening up in the green. Power, green, energy, all between 9 and 12% up. Cochin Shipyard is having a second very good day. We were just talking about Colgate, about 3% up in pre-open, but of course all of those will change. KAC International in focus, and we talked a bit about the order wins which have been coming in, and that's in focus as well. Aditya, what would be your take on the Adani Pack right now?
It is for highly risky investors per se, although some of the assets like Adani Port, Adani Power are really great assets. However, the news that comes every day can have a flip-flop on the stocks either ways, on the positive side of it or on the negative side of it per se. although Adani Group has clarified on whatever has happened in the US and with the SEC, only high-risk investors who have very high-risk tolerance can continue to invest in the stocks. For us as an investor, we are a clear avoid. We don't like to invest in stocks where we don't have an estimation of what is going to happen today, tomorrow, day after tomorrow. And mind you, none of these stocks are really cheap at this stage as they were 1 year ago when the Hindenburg crisis had played out. So I would like to clearly avoid these stocks, wait for clarity to emerge on what is going to happen in the US per se, and then try to invest in any of these stocks. However, you need to put on your watch list Adani Port and Adani Power. These are two companies which have really great assets, and any correction on these stocks would be a buying opportunity.
So Adani Ports on your watch list is what Aditya is saying. Just some of the others, Midcap IT is having a pretty decent day. Sonata we spoke about, it was on our watch list as well, but look at Mastech, not half bad. Philips Carbon Black, just about 2% up. Now this is a particularly interesting company. I'm wondering, Shrikant, if this is something that you're tracking and you have any view on a PCBL?
Yeah, PCBL is also on our watch list, and it's a buy based on fundamentals. Also based on technicals, the stock has completed its corrective pattern somewhere close to 380, and now again it is rebounding. It was around some 580, 600 sort of levels, and from there all the way it corrected back to the levels of 380, 400. But now, based on its technical formation, we are expecting a pullback in the stock. The stock can move towards the levels of at least 450, 455 sort of levels in the near term, and in the best case scenario, we may even see the levels of 500 plus. So it's a buy with a positional view, because currently it is around 430 and we have to keep stop loss somewhere around 380. So it's a stop loss of 10%, but in case if there is any correction, then it will be an opportunity to buy for. So PCBL is on the buy list from our side.
Defense stocks have been in a sweet spot. It's not just Cochin Shipyard, but all the defense counters have been doing quite well as we see it. Cochin is up another 5%. Masscount trades marginally higher. BDL is also something that has seen an intake. We'll in fact talk to Zen Tech. I caught up with them yesterday, so we'll of course hear out what Zen Tech has to say about the outlook for the defense sector. And from what I understand, it's actually looking pretty good. Take a look at how Ashok Bilkon, Natco Pharma, KEC are doing, because all of these have bagged orders. Ashok Bilkon, after a fall yesterday, is up 2%. Natco Pharma on the land parcel sale trading with a gain of 1.4%. KEC, the star of the day, 4% higher. Hutco, NBCC have also bagged orders, so both those counters should be looking good in trade. Shrikant, trading idea, NBCC up about 1.5%. Hutco is expected to open up marginally higher. I'm assuming they may build on these gains as they go along the day. KEC International included in Ashok Bilkon too. From any of these four stocks, pick one that could make a good long trade in the first few minutes if we get a flat start, because the news flow is positive.
Yeah, I think from the PSU basket, most of the stocks have formed double bottom or higher bottom sort of formation. I'm to say when the market was around 23,300, 200 levels, that time the market was at its lowest point of the entire fall. But all these PSUs made a higher bottom as compared to their previous lows. And that's the reason we are seeing some buying interest in PSUs, and they are outperforming relatively. They are doing better as compared to other stocks. So in that, yes, we like NBCC, which is around 97, 98 sort of levels. Here the stock has made a higher bottom at close to 87, 87.50. And based on its formation, I think it is heading for the levels of 103 or 105, which is like decent upside in the short term. So it's a buy at current levels with a stop loss close to 92, and we can expect 105 on the high side. Yes, we also like Hudco, we also like BHEL, but they are like far away from their stop losses. So yes, these stocks can also do well, but NBCC should be on the watch list.
NTPC Green, let's take a look at what it's doing in early minutes of trade. Yes, Swiggy has also had a very good run last few days on the back of a couple of brokerage upgrades, and so has Ola Electric. NTPC Green after a 12% move yesterday, it trades flat. Swiggy now at record highs, 508 on the count. Remember, the listing was closer to 414, and Ola Electric is up another 2%. We'll talk to Aditya about what he's making of these three new sort of themes the markets like. Brokerage note of the day, it's 9:05, and Varsha is here with more on what CLSA is saying about Star Health. Varsha, I believe the note is very constructive, even though there's no sort of target price been put out.
So yes, Samina, so if you see, CLSA had did ground visit and did deep dive with agents, regional managers and doctors of the Star Health. Post that, they have rated outperform to the stock with a target price of 590 with upside potential of 29%. The outperformance rating has been actually given based on the strong market position and operational efficiency. And the Star Health actually dominates Uttar Pradesh retail health insurance market with a 50% share and better loss ratios according to CLSA. Now, agents prefer Star for smoother processes and quicker turnaround times according to the brokerage firm. And Star actually launched the Pratham Hospital network, which will benefit both hospitals and customers. And UP, if you see, contributes 6% to Star's FY24 premium with 40 plus branches and 50,000 agents. And Star's loss ratio in UP is in mid 60%, which is better than the overall company's average. And lastly, CLS has also noted that the cohort-based pricing allows insurance to differentiate renewal price based on claims, which may help affordability but could penalize though with chronic illnesses.
Okay, Varsha, thanks for that. Interesting note, interesting thought, not a massive reaction, but not that it is anticipated that way. But Aditya, do you track Star Health? Is it an investable stock? CLSA believes it is. What's your view?
Neeraj, I have a very negative view on Star. Star has been losing market share in the retail side of it. Star has a massive problems on paying off claims. People are porting out their policies out of Star into other products per se. Although the valuation is cheap, the company needs to really work on the brand per se, on this image that has been created now of Star, that Star is instantly going to reject claims. Even doctors, even last month, Ahmedabad, the entire city of Ahmedabad blacklisted Star because Star was not paying up claims. Although they have a strong agent network per se, and it has emerged that now LIC is not going for Star, but it is most likely going for Manipal Cigna per se. I'm not too positive on Star until and unless the company changes its image, works on the claim settlement per se, and from there on we need to look at it. So not so positive right now. We'll wait and watch as to how the company proceeds over the next 6 to 12 months and then take it.
Right, that's the view, and I know that you're not much of a fan of Star Health or insurance as a pack. But Aditya, coming in a few more names. Swiggy, new record highs, recent brokerage upgrades. Ola Electric, again, yesterday with the new launch and upgrades, the stocks done quite well in the session. And you had NTPC Green that made a pretty good day for its very first day on trade. Any of these three counters that you like and you would buy and have in your portfolio if you don't already have them?
So my pick would continue to remain with NTPC Green. The entire green energy pack per se. That looks really very interesting. Something like a Vare, that also looks very interesting to me. What is happening per se in this space is that the government's push continues towards green energy, and all of these companies will continue to remain beneficiaries over the next 5 to 10 years per se. So NTPC, Vare, for that matter, Premier Energies as well. They spoke on NDTV last week. That looks really very interesting to me. Specifically on Swiggy and Zomato, I think the valuations are extremely aggressive on all of these companies. Although Blinkit has turned around for Zomato, Zomato's business could continue to struggle if the QSR space does not turn around over the next 6 to 12 months. That is really very important. Swiggy on its own hand is really struggling with Swiggy Instamart, whereas Zomato has turned around Blinkit per se. So in my opinion, I would tend to avoid Swiggy and Zomato per se. Both of them are really very expensive companies to buy. Coming finally on Ola Electric, as I have already said, although they are launching up the new products per se, still on ground challenges remain with respect to the serviceability of the fleet that they have already sold per se, and that is a real challenge for the company. So it's a clear avoid. Swiggy is a clear avoid. Ola Electric is a clear avoid. You can look at NTPC Green Energy or a Vare or a Premier Energy first.
Okay, so I mean, some flashes on your screen. This is an NDTV Profit exclusive. It's important because, I mean, there is a lot of hogwash that goes out there from people on the street acting as experts. But let me get, I mean, I don't know if we get Charu right now to talk about this, but those flashes are important. SEBI will tighten rules for sub-brokers and brokers to face liability. Stricter eligibility rules for authorized persons to act on behalf of brokers. I think this is always welcome. You need to have some experience to be able to act as advisors and shouldn't just turn up and say that we are advisors in some sense. Brokers will bear the liability for defaults by authorized persons. This is interesting. You make not just the authorized person responsible, but brokers who act on behalf of these authorized persons or acting as authorized persons also responsible. Now, this is, I mean, it's a gray area how this gets executed, but some of this in principle seems okay. The extent to which this is implementable, if you will, is the question mark.
What I found also interesting is the new criteria for authorized persons. Graduation, 3 years of market experience and passing a qualifying exam. And one would assume that is what most people already do. But clearly, with the boom in demat accounts in recent years, it's become a free-for-all. Yeah. And maybe let's take a quick view from, okay, I have Charu on the phone line, I'm told, who's broken the story. My colleague who's brought this NDTV Profit exclusive. Yes, Charu, very quickly, what are the key highlights of what SEBI is set to do?
Hi, so authorized persons are these people who are supposed to represent the brokers, right? They are the sub-brokers. They are the people who are going to small towns and cities and getting people to invest. Now, what happens is if these people are not qualified enough, they can, not give the right sort of information to the potential investors and can also bring a bad name to the brokerage that is concerned. Now, that is why they have been asked to make the qualifying criteria more strict with, at least having a graduation degree, 3 years of experience and more knowledge about the markets by qualifying exam. Now, if they do not have this graduation, the amount of years of experience in the stock market will have to be increased. This has been done solely because there has been an exuberance of the demat accounts in the last 4 to 5 years, and more number of people have been brought on board, and there have been instances of, frauds and lies being made to the investors in sort of promises and half-baked information. And that is why this has come forth, and it will be, brought forth in the form of paper in 1 to 4 weeks, and we'll see how it goes from there.
Okay, well, developing story, of course, or developing comments really, but important story break. Charu, thanks for that. And of course, details on this throughout the day on NDTV Profit. A story on this on our website as well if you want to read more. But this is very important from a retail investor perspective as well as a lot of people who take this up as a profession, by the way. So important rules out there, source-based information, it's an NDTV Profit exclusive. But here's how the markets are starting off. This morning, Thursday morning, flat as flat can be. Banks are participating about 0.25%, nothing too much, but still slightly higher. IT is flat in trade. Mid caps and small caps should come up on your screen next. Flat start for almost all key indices. Let's get the heat map. Don't expect too many movers there. But Adani Enterprises carries off from where it left off yesterday, 11% high, yesterday 1.5% today. HDFC Life has some uptick. Coal India, Shriram Finance, ITC, HUL. So the list is of a lot of stocks which are participating, but nothing too great. On the flip side, iShares is down 1%, Infi is down about 0.8%, Bajaj Auto, M&M cools off a little bit. Not that it had a breakneck rally, but in a month about 9%, not too bad. So sedate start, if you will. But nothing too much to report really on the large cap space. Maybe the broader markets. So Tamanna and Samina might have a better luck. But I think the two names that stand out, or the top three probably, the Adani Twins and HDFC Life. I reckon some of that cheer would have spread to some of the other Adani Group stocks as well, looking at how Ent and Ports have started off. And iShares on the downside.
So more of the same as far as yesterday's close is concerned. A flat consolidating market and some pockets which are actually showing some signs of movement. Let's pull up the sectoral indices just for a second before we move ahead. And Nifty reality, they're ruling the roost on the upside. No major gains though. It's all trading in a range. Nifty Auto seeing aggressive profit booking in the first few minutes of trade, as are IT stocks as well. But let's also look at what the broader indices are doing, and completely flat on the mid-cap 150 as well as the small cap. So just completely flat, no big movement there. All right, specific stocks. Adani stocks in focus this morning, and of course standard disclosures for you, but that seems to be the flavor of the morning. So let's pull up the pack. Adani Green, Energy, Total, Power, Ports, and see what's happening there. And that's where the buzz is. Around 8.5% on all of those counters in opening trade. In fact, yeah, there you go. Adani Ports and Power as well buzzing. Adani Ports not as much. A bit of profit booking maybe there, over in range right at open. Sonata Software, the other stock on our watch list this morning. They bagged an Australian client, 2.5% up. KC International, we're looking at it from an order win perspective. And that stock about 6% up. That was on our watch list as well. NBCC and Hutco have signed an MOU to develop land parcel in Noida. Both stocks seeing a spot of green there, between 3 and 4% up. And defense stocks in focus. One space which I thought we should talk a bit about, Garden Reach and Cochin Shipyard once again. Cochin Shipyard actually has been buzzing last couple of trading sessions, both up in the green. So these are some of the key winners and buzzers in early trades, Samina.
It's a flat morning though, Taman. I don't think we're catching too much action in early trade, barring Adani stocks. I think the week has belonged to them from start to finish. Your top gainers on the Nifty 500 is Adani Total. It's up 7.5%. Adani Energy on good volumes is up almost 8%. Adani Green is up 6.5%. I think you mentioned KEC and the Hutcos and Ashok Bilcons and NBCCs of the world. All those counters trading deeply in positive territory on back of significant order wins. KEC is up 6.5%. Ashok Bilcon is up 2.5%. Cochin Shipyard seems to be the star in the shipyard space, is trading with a pretty significant up move in trade. Yeah, you've also got PCBL, which I think you've mentioned, Tamanna. Apart from that, a few other names. Colgate is up 2.5% post its analyst meet. You've got Honasa that's trading up 2.5%. A quick check on NTPC Green. It's day 2 for the new listing. Let's see if the counter is still reacting well. Oh, wow. So after a 13% up move yesterday, nearly 2% higher on NTPC Green is what we have. Godrej Properties, let's see whether it's reacting positively or negatively. It will give us an indication of how the response has been. And like we'd said, in fact, I think Neeraj had said that the stock is expecting good demand for its QIP, and that's reflected in the stock price. So whatever supply has come in is getting lapped up, irrespective of the fact that it's, and also the fact that it comes in at a 4% discount is what probably instays are grabbing as we see it. PSU banks are not doing too badly, and I think that's a good spot in trade this morning. On the sell side, GE Vernova continues to lose out. There was a big promoter stake sale that happened to the tune of 8-9% over the last 2 days, 3.5% lower on the counter today as well. Apart from that, you've got Aisha, Tejas Networks, Alembic Pharma, M&M. That was, of course, been a roller coaster one for a few days. Some of your frontline IT names like Enfi, Zenza, Newgen, Oracle are all trading with cuts of 1%. But all in all, I don't think anyone's complaining. It's a flat start. You've got a handful of gainers, and the handful largely is made up of Adani stocks that are the big gainers in trading this morning. Shrikant, have you identified any early trades, potentially intraday or maybe up until tomorrow before the week closes?
Yeah, I think there are a couple of stocks which are doing really well. We already discussed HDFC Bank, which is trading higher. We also discussed Adani Ports, which is around 12.20. But I think these fertilizer stocks, they are showing some strength. And in that Chambal Fertilizer, it's something which should be on the watch list. The stock is forming some range-bound sort of formation, but it is forming some higher highs on a day-to-day basis, which is positive. Based on its technical formation, I'm of the view that the stock is heading for at least 530, 535. And on the dismissal of that, we can even see the levels of 580 or 560, which was its all-time highest level. So Deepak Fertilizer, Chambal Fertilizer, as well as RCF should be on the watch list. And specifically, Chambal Fertilizer is a buy at current levels with the stop loss close to 484.
Okay, thank you so much, Shrikant, for joining us this morning. And it's a flat morning. I think stock specific is where the action is. Bank Nifty is doing relatively okay. IT stocks losing some of their sheen. A lot of excitement about financials right now. Aditya, is there anything that you are particularly keen on at this point?
Tamanna, so as I already said to you before, this up move on the large private sector banks, that was one place which was really where you could hide in the market as the market underwent a correction which was much needed. Now all those stocks have also risen, so I will continue to back HDFC Bank, ICICI Bank, Axis, and Kotak to some extent. SBI within the PSU bank continues to remain our top pick. We need to be cognizant of the fact the microfinance cycle has deteriorated. All those banks with exposure to microfinance and credit cards are the ones who are suffering big time. Banks like IndusInd Bank, banks like Ujjivan Small Finance Bank, banks like AU Bank, all of those banks are really struggling right now at this stage with asset quality. And one must be really very cognizant of the fact that this will take at least 6 to 12 months to get corrected per se, after which the economy will start to move. So hide in the larger private sector banks and be very cautious on the smaller lenders.
Cautious on smaller lenders. What is, I think Shrikant is gone now, but we've got a whole bunch of these other names that are, EMS has also been having a sort of mixed week so far, but Honasa consumer, 6.5%. Aditya, do you track this one? I mean, it's been on the sell and buy side, but it's been swinging quite sharply. But a very sharp up move as we see it. Do you have a word on Honasa?
Brand Mama continues to stay strong. However, they had stuffed their inventory up and now it is coming back to bite them per se. The stock is not cheap, but high-risk individuals can continue to put this stock on radar, and any move below 200 is an excellent opportunity for this stock. However, it will require some long-term investor to come in. It will take about a year for the company to turn around the channel inventory stuff that they had already done before the IPO per se. And also this is questionable as to why the management for the IPO did such kind of inventory stuffing per se. However, at some valuation, the stock becomes really very attractive, which could be below 200%.
Okay, one more, Aditya. We should just quickly look at what's happening with Paytm. Paytm has seen an interesting note out from UBS today, where they've maintained neutral but have raised their price target to 1,000 rupees, which was earlier 490. The stock's not way off from there, but another 9-10% upside. They say most regulatory issues resolved, business performance is key, regaining customers and digital market share gain most important. Digital payment market share drop has likely bottomed out, and they think adjusted EBITDA will turn positive in Q4, so as early as Q4. Are you feeling optimistic at all about Paytm, Aditya? How are you viewing Paytm?
Very interesting note per se. Paytm is no longer a digital payments platform. It is a lending platform per se. And now they have given a default guarantee per se to their lenders that they will be the first ones to absorb the default if it happens across all segments that they operate in. At a time when the microfinance sector is undergoing a severe burn, I don't understand why a Paytm would do really well over the period of 6 to 12 months. Their asset quality will also be horrible as compared to all other microfinance lenders per se. What is really happening here is the stock was beaten down really very badly from about 2100 to about 300 or 400 per se. And now from there on, the market is really recovering, the stock is really recovering per se. Has the business turned around? Yes, from a regulatory perspective, it has turned around. However, the lending business that they are in, that is under deep problems.
Aditya, would you buy it right now?
In my opinion, no, I will not buy it. I will be very, very cautious on the stock.
Okay. Thank you so much, Aditya, obviously talking about Paytm, and yeah, markets are doing okay. Record high on HDFC Bank, and remember that was our technical analyst's first call this morning as well. HDFC Bank at 1828 right now. But Sabina, focused this morning on defense, and an interesting conversation you had.
It was really good actually. And you know what stood out for me, Tamanna and Neeraj, you'd imagine that defense is a sector companies like Zen are companies that would gain if countries are going on war, if there is a geopolitical strain. But interestingly, peace or ceasefires are better for companies like Zentech because the kind of work that they do in defense is rather preventive as opposed to reactive. So in fact, it was great talking to Atluri, and he talked about, I mean, I did also ask him that with Trump in power and with everything becoming so inward looking, would they manage to do okay? And they said it would actually be a big positive for a company like Zentech. But it's been a phenomenal story. We all know that the stock has performed, the numbers have looked great, margins are good, you know, their order book is healthy, and they've managed to hack 20 patents in this calendar year, 10 patents alone in FY25. But as of course, Ashok Atluri shared perspective about what's happening at Zen. The stock is up about today in today's session, and also talked about what everything around means for the sector at large. Listen in.
The tank simulators are very, very complex simulators because you have to replicate the complete the tank, and you open the hatch, you get into the tank. It should be physically complete replica, and that should be on a motion platform. To put it in a container is a very, very challenging thing. And, we did it for the Indian Armed Forces. Last year when we went to US, actually in the US, their army personnel came and said that they have a budget which for the next 5 years to make a containerized tank simulator. And when we actually hooked them up to India and showed them the demonstration of the tank simulator, they were actually flabbergasted and said, "Does India already have it?" And we said, "Yes, it is there." And so this containerized the tank simulators can actually be transported, and they can be, people can be trained on that. So this is quite a technical engineering achievement. Forget the technology, the simulation, and all that. And so we think that this will actually, help us, penetrate the US market. That's something we are focusing on at this point in time.
Ashok, before I talk about the specific international markets or clients, and I know some of it will be qualified information, I want to understand from you, what is the expected market size locally and globally, of course, including the Indian Army and, of course, your opportunities internationally, and how soon do you anticipate scaling up deployment?
So, tank simulators, we have already started selling it. This is the old patent that we applied for, which we got granted recently. But yeah, our estimate is the tank simulator market is around 4,000 crores within India, and overseas it's almost $1 billion. That's our estimate.
And what potentially could be your wallet share from this market, not today or tomorrow, but over the next 2 to 3 years? Because I'm assuming any thing that you're spending on today will come with delayed gratification in some ways.
Yeah, so probably 5 to 10% of our revenues may be generated for the simulators. From the army may be generated for the tank simulator, from the tank simulators.
Okay, and when will this begin to turn revenue accretive? Could it be expected the early sort of trickle-ins coming in as soon as next quarter, Ashok?
It's already been recorded many times. We have been selling it. The delay in patent grant, but we expect again lot of revenues to come from Indian Armed Forces also, and we think it'll probably happen in the next year and the year after also.
Well, you said you've already been selling it, but now, of course, the patent has come, which was outstanding for the last few months. What is the impact of this then on financials? Because like you said, you've already been selling it. So what's new, right?
So it's in the sense that, now we can actually tell the government that, there is no other vendor. Even if we are a single vendor, we can buy it. And when we go overseas also, when they say, listen, we want other buyers, we say, here's the patent that we have. And, also this helps us in saying that the IP is owned by us, and in single vendor situations, it is easy to assert ourselves that, it is a single vendor because we are IP owners of this. And also, establishes us as a IP player, not as a, manufacturing for some TOT or, some contract research outsourced item.
Sir, you mentioned that there was some interest from some of the countries like the US in our first question. You want to tell me if there are any active negotiations currently underway with any other countries?
No. I mean, so the tank simulators we are marketing to various other countries, but US was something that in the last November when we went, they had shown interest in this technology, and We are talking to them at this point in time, but that's a couple of years away, at least a couple of years away, before we get anything in that. But other countries may be a little sooner than maybe the next year or the year after that.
So just let's expand that conversation now, right? With 20 patents secured in 2024 and 10 in FY25, how do you see this intellectual property portfolio contributing to revenue growth in the next 2 to 3 years?
So, in the sense that, one thing about the patent is that, we have developed a lot of libraries that will help us develop more products very easily. If new platforms come, we will be able to develop more platforms. And what we think is, because of this, what we are developing is not just a one-off product that we have got from outside and trying to sell for a particular contract, but this is a capability development which gives us a sustainable competitive advantage. That means to say, if I develop for T90, I can develop it for Abrams tank, I can develop for Leopard tank, because I have the physics and the software for the underlying software for that. So this is actually a very huge statement that the capability that we have is, very scalable and very sustainable. Yeah.
So being recognized, and you will leverage, and I think that is what critical, right? It sort of forms a little bit of a base in terms of what you're currently working and focusing on. I want to talk about your earnings as well, because they've been phenomenal. You've posted a 3 times growth or 3.6 times growth in revenue. Is this momentum sustainable? I know you impress quarter on quarter, but I do have to ask you this. Sustainable in terms of revenue growth, and also is there an upside risk? Because with all these patents coming in, revenues are only bound to go up from here.
So, we do think that there is a growth potential, and we have been saying that, we should be able to attain a 50% CAGR on an average over the next couple of years. And yes, we think that, the way it is at the ground level, it is looking extremely encouraging. And the government of India is really, really rapidly modernizing the fund. And, there is the study by the Terry which said that, investment of 15 crores give a savings of 380 crores. So that itself, a lot of pressure on the army on, moving from traditional to simulator training. And government is really, really acting very fast on that. So yes, I think the growth is expected, and it's expected rapidly. And the second thing that we do is the anti-drone system. And we know everybody is now really, really fearful of the drone threat, and we are rightly in that sweet spot where training and anti-drone systems have become important in the current scenario.
Sir, your order book is also very healthy at 956 odd crores. What percentage of these orders can we expect to be executed in the remaining quarters or the second half of FY25?
I think, we have said that we'll do about 900 crores this year. So, out of that, if we remove the AMCs out of it, then we have about 650 crores or 650, 700 crores. So out of the 700 crores, we expect about 400 crores will be executed during the current year, at least 400 crores. And the rest will spill over into the next year. If whatever is unexecuted will spill over into the next year.
So 400 crores in the next 2 quarters of FY25, right?
So, I'm just trying to align myself with the 900 crore target more than anything else. But that will be at least a number for me. Yeah.
You also have a very healthy pipeline. 3,500 odd crores is what I understand is from the order pipeline. Can you tell me what percentage of this is in advanced stages of negotiation or finalization? And can we expect announcements in the next 2 quarters?
So yeah, in the next 2 quarters, I think we are expecting about, we said that about 1,200 crores worth of orders at some stage, which may materialize within the next 2 quarters. And the rest of the orders, we think they come in the next year. And we expect the pipeline also to, balloon as we go into the next few months.
Also, what I do want to get a sense from you on is training simulators and anti-drone systems make up a significant chunk of your current order book. How do you foresee the contribution of newer segments like RCWS and naval systems to future order wins or negotiations?
So, again, RCWS is a remote control application that we can integrate with the anti-drone system to shoot down the drones. And then there are surveillance systems like the cameras, which can be integrated with the anti-drone system. But what we are seeing now is these systems by themselves are, being demanded by the customers, some of the customers. They are saying, listen, we want your remote control weapon station on our Jeep to take out the soldier from the harm's way. And so these applications are extremely good, and we think they will start, the revenues from them will start coming into the next year. I think this year may be a little difficult, but next year we see substantial potential in them.
And from what you gauge and understand, what is the market size of these remote control weapons, locally and globally?
Yeah, so we have estimated that for both the surveillance and remote control weapon station, it's about about 8,000 crores within India and about 16,000 crores overseas.
Sir, you've also given us a guidance where you indicate that you're looking to double down on US investments. Any specific plans, markets, partnerships, product localization that you're looking at right now, and also timelines of when this starts having a financial impact in terms of your revenue cycle?
So, the earliest impact we think will be in FY27, not earlier than that, even though, we are looking at trying to get some, quick wins in terms of, not only being the prime, but, to team up with primes and be their subs and, try to get some contracts there. And then we are also looking to directly deal with the armed forces, which will be the second thing. And third is, using US as the base for going over to South America, of course, the other North American countries and the NATO countries. So these are the three areas that we want to do from there. And we think that with the new environment there, will be really it's an opportune time to be in US because we expect the sales to happen in a big way from US now.
Also, you had 100 crores raised through a QIP. How are you looking to allocate that funds, and what is the sort of return on investments on these fundraisers that you've done?
So we raised about 1,000 crores, Amina, and what we are trying to do is
sorry, my bad.
So we are focusing on acquisitions. That's the first area of focus for us, and and also because the sales turnover is exploding, we will be using second large part for the working capital. And so these are the two areas that we'll be focusing on. But other than that, it will be generally R&D and a bit of capex for the rest of them now.
Acquisitions, and you mentioned you're going to double down on the US. So are these acquisitions going to be focused in those markets, or are you ready? Have you identified a potential target? Is it local? Is it global? And what will the synergies be? Will it be backward integration? Will it be a peer? I mean, what are you thinking?
The two things that we are looking at. One is, of course, the U.S. investment is one thing, but the second thing is within the acquisitions we are looking in, expanding our scope within Air Force and naval simulation. And the second is in the area of anti-drone system, where we feel that there are technologies that can enhance, like similar to what we did with remote control weapon station and surveillance. Are there any other technologies that we can get to to complete the anti-drone system scope that we want to do? Again, our objective has always been, how do we become absolutely number one in both the simulators and the anti-drone system? So anti-drone system, we are not there, and we want to be there. That's one of the purpose of the race.
One question I want to ask you, which I think the whole world is thinking and talking about, is with Trump back in power in the US. What does that mean for the US as a client, for localization plans in the US? Do you feel like this is going to have a material impact on businesses like yourself? And also, including or excluding the US, the constant changing geopolitical setup, has it impacted business? But let's talk about Trump for a minute and then move to the larger geographies.
I think Trump's win would, we personally think that it would mean end of wars at most of the places. I think today they declared ceasefire, and that was our expectation. If Trump wins, the wars will end, which is actually very good news for companies like Zen. Two things. One is the immediate operational requirement of buying, weaponry, operational equipment has kind of, come down. But the unease will continue. That world is an unpredictable place. Wars will happen, will continue. And that means to say they have to be prepared for the war in the, post-Trump era. We don't know what will happen. So the investment in training will go up significantly in the peacetime. And second is, with respect to anti-drone system, the anti-drone system, we are seeing everywhere, everybody is saying, why are you buying fighter planes? Why are you doing this? For various reasons, they're saying, drones will replace everything. So anti-drone will become the most important thing in anybody's arsenal as a defensive equipment. And so, we think Trump is coming is a very good news. And second thing is, we setting up in US is also good news, because I think with Trump in the country, the people will want to buy from US, and we want to really do the value addition in US to comply with their Made in America requirement and send it from there. And your next question was about geopolitical. What exactly was it, Samina?
Yeah, what I wanted to understand is and I think you started by answering that, right? With the ceasefire now around the corner, most people think and underthink that if there are more wars, it's better for defense companies. But like you said, peace is even better, because then you have countries investing in anti-drone technology, and companies like yourself then stand to benefit even more.
Absolutely, yes. I mean, say, for operational equipment, which was emergency purchases that were happening, that will cease. But, people who are thinking long term, they will talk about, how do we get prepared, and very, short and with a smaller investment. And for that, training is absolutely necessary. And the drone threat is again there. And for that, we need anti-drone systems. Yeah, absolutely. I mean, Zen is in a very, very sweet spot that way.
No, war or no war, it's great. And it's so good that a defense company gains even
very
more.
Frank, I mean, I would prefer no war.
I know. And it's amazing that you can say that.
Yeah, absolutely. We prefer no war, and in the sense that, the point is, this company was formed to protect India, make India very strong.
Preventive.
If there are no wars, we would be very willing to...
Ashok, I can't hear you. I think you've gone back on mute.
Oh, no, I'm not on mute.
Okay.
Sorry. Yeah.
Okay, they can hear you.
Yeah. So the whole point is that, no war is good news for the world, and good news for Zen Technologies also.
Okay, so that was the conversation with Zen Tech. Meanwhile, the big focus this morning also is what has been happening in the auto space, and it's been quite interesting. Fresh EV launches, and that has been in focus. So Mahindra & Mahindra has launched at a very competitive price 2 variants of an SUV electric vehicle. Ola has launched its own versions of scooters aimed at gig workers, and Hyundai got an a positive brokerage view, so had a bit of action yesterday. Ola up today as well. But the EV space is just heating up, and Puneet is joining us for more on this. Puneet, I think the big question is that the EV story is long coming as far as India is concerned. Are we now at that point where we have enough inventory, enough variation in models for people to really adopt EV in larger numbers?
Well, definitely, Tamanna. It's clearly at an inflection point, and we're also looking at a couple of other things as well, because the Vahan data has been throwing up some very interesting trends along with what's happening in the EV space as well. So we will be looking at how the market share trends have played out for all these companies. But when you look at the two-wheeler Vahan sales data, it's very interesting what's happening on a year-on-year basis. Yes, we've had someone like a Honda Motors, which has gained market share, and they've solved their supply chain issues. On a month-on-month basis, though, look at the growth for someone like in Hero MotoCorp. That's one of the key things to watch out for, because last year we did have Diwali at a very in a middle month, so as to say between October and November. This year the whole impact was in November. Still they're anticipating and that's the growth that's coming in this particular month for someone like a Hero MotoCorp. They expect to sell more than 6 lakh motorcycles in this month itself. That's roughly about 10% of their total sales for the whole year in just 1 month itself. So that's one of the key positives. Another is TVS. It's maintaining its growth momentum going forward as well. When you look at the other 3 players as well, Bajaj, Royal Enfield, Bajaj seeing some pressure now on a year-on-year basis, while someone like Ola Electric is again losing market share on a year-on-year basis, and we'll get to that eventually of how it's placed in. But on a month-on-month basis, the drop is very sharp for someone like an Ola Electric, and this despite being a very big month for the sales of two-wheelers, especially with the Diwali and increased discount by the company as well. So definitely a key concern for someone like an Ola Electric. Royal Enfield on a month-on-month basis, it's also down 17%, something to watch out for as well. When you look at the four-wheeler space, the picture is more grim as well, because while on a year-on-year basis, of course, the growth in this particular month is very, very, something to watch out for, because we had the Diwali month and Diwali in this particular month as mentioned, and just the numbers are not looking very good as well. On a month-on-month basis as well, the growth is, very tepid. down roughly about 40 to 48% for all players across the industry. So they have mentioned that they've reduced the inventory in this particular month, but the numbers are suggesting that the sales haven't picked up as much as they had hoped for. Finally, when you look at the commercial vehicle makers, they're still anticipating, government spending to be one of the biggest drivers as well. You can see very tepid numbers as well, down 20 to 25% on a year-on-year basis. Month on month also the picture isn't very pretty. So the pressure on H2, especially for commercial vehicle makers, is a lot to show the growth for the full fiscal year, which might not eventually come as per some analysts as well. Finally, tractors makers showing some positive trend. Someone like a Mahindra and Mahindra is the biggest gainer here, while Escorts has tried to increase growth. It's still tepid in this particular month. So definitely two-wheelers are still outperforming on month on month and year-on-year basis. The picture is very grim on the passenger vehicle side.
Okay, that's the passenger vehicle side. Let's also see how the two-wheeler space is performing, as well as the four-wheeler EV space. Who's standing out amongst that pack?
Well, definitely it's a very interesting picture what's happening with each player. But, Ola Electric is again in the news, but not for the right reasons today. While the share price is up because of positive brokerage notes, as per the market share, it's not looking very positive there, because when you look at April, that was the first big month after, the subsidies had fallen. So Ola was the biggest winner, but consistently after that, it has lost market share. October was the first month when they gained market share on a month-on-month basis. It was 30% in October. It's down to 24% now. And that's one of the worrying signs as well, because they had given a lot of discounts in this particular month, Tamanna. So it's definitely a key concern. The other two big winners are, of course, TVS and Bajaj. Look at the market share. It's gone from 12% in April to 23% for TVS. It's gone to 22% for someone like a Bajaj. They both gained market share of almost 5% cumulatively in this particular month at the expense of Ola Electric. Ather, while it's tottering along at a very slow pace, and while, Hero, they've launched Vida as well, another variant. They've done very well in this particular year. They're anticipating at least 10% market share by the end of the fiscal year. So with this, Ola is definitely one of the biggest losers in this particular time frame. I just want to also pull out the four-wheeler data and only talk about Tata Motors, because it's one of the biggest players. But compared to last year, the market share is down 10%. And that's because of, someone like an MG Motors, which is picked up. And, we discussed yesterday that Maruti is coming with an EV in the fourth quarter. Mahindra, of course, you spoke about, as well as the Hyundai Creta EV is also coming. So the four-wheeler market in the EV space isn't growing at a faster pace. Plus, the competitive intensity is very high right now. So Tata Motors will be in focus, but, it'll be very difficult for them to gain market share again, because it's very sizable. But compared to the last year, that has been one of the key concerns to watch out for.
Okay, so it's a pretty comprehensive view on, or a snapshot, I would say, on the auto space. But let's get deeper. Amar Jatin Seth, the secretary at FADA, that's the Federation of Automobile Dealers Association, is joining us now on the show. I'm speaking with Abhishek Gaushinde, Deputy Vice President Research at Mirai Asset Sharekhan, who tracks the space very, very closely. Let's get a mood check first from Mr. Seth. Thank you so much to both of you, first of all, for joining us here on NDTV Profit. The focus over here, Mr. Seth, is, are we going to see now enough electric vehicle category launches to increase adoption? Because adoption year on year and more people buying EVs year on year has increased, but the base is still small. It's not really made a massive headway. And the reason perhaps is pricing or enough options available. Do you see that changing now with the large number of launches we've seen in the last few days and more expected up till Jan end?
No, I think you hit the nail on the head. Though we are talking about percentages, the absolute number is still very small. But that also shows us that there is a lot of headroom still available. Like if we are talking about the two-wheeler space, even in the festive period, we've seen around 1.3 lakh units of EVs being sold. So if you compare that with the total number, which is close to around 25-30 lakh number, then that is as a percentage still only around 6%. So and that is high though. But however, I see that changing because yes, adoption is happening. We've seen the withdrawal of subsidies that might have pulled back a temporary setback, but that would, because any price change takes a little time to get accepted. In developed markets also, we've seen that it happens sporadic growth and more and more numbers will suddenly spike. And I don't see this to be too much of a worry. And I think this segment is certainly set to grow exponentially.
terms of, let me talk about passenger vehicles for a second with you, Mr. Seth. In terms of passenger vehicles, I suppose Tata Motors has been dominating the space for market share, and now you have an M&M launch, 2 products which will come in there in Jan. We're waiting to see what Maruti does. Hyundai also will be expanding. We'll have a EV Creta variant. Do you see this entire space being shaken up, and who is best placed in your view? Which brand is best placed in your view? Where is the most demand coming for?
So even in passenger vehicles, we're looking at around a 2.5% EV penetration currently, which translates to around 10,000 units. So it is not a large market as of now, but in passenger vehicles, at least we are seeing the reputed players, right? Unlike a two-wheeler space where we had a lot of new entrants into the market, and now the great names of the two-wheeler space actually coming with their products. So similarly, unlike that, in the passenger vehicles, we have had, like you rightly mentioned, the Mahindras, the Tatas, all of them who have a lot of pedigree behind them. So the key factor in the four-wheeler space, I think, is when the differential between the EV and a regular combustion engine, the price parity or the difference in the premium that a person has to pay, if that is not too much, then we are seeing that change happen. So I think a Tata and a Mahindra have been able to bridge that difference. It's now no longer a large gap between what you would pay for a petrol or a diesel engine versus what you would pay for a EV. So that adoption would happen much quicker, I guess, due to this.
Abhishek, I want you to come in on this and then start with how you are viewing the recent developments and what are you liking. Let's start with passenger vehicles first. How would you rank these companies and who is looking most promising?
So, keep aside this thing, the discussion on the EV side is that we are dividing into the 2 segments. One is the scooter and second is the passenger car segment, not the two-wheelers. So, in the scooter segment, now what we are seeing is that the EV story is entering into the second phase. In the first phase, players have introduced their products and create awareness about the product. But now it is happening that some kind of a consolidation is started happening in the segment. So say, for example, the top 5 players were constituting almost 60% of the market in 2023, but now the situation is that almost 83-85% of the market is in the hand of the top 5 players, and most of them are appearing to be serious players. Say, for example, Bajaj, TVS, Ather, Ola, and Ampere are constituting the top 5 market share player currently. Now, in the two-wheeler space, we have been liking this Hero MotoCorp because earlier it was expected to be a laggard in the EV space, but now it has been gathering the pace. And in coming periods, we also see multiple product launches in the EV segment from the Hero MotoCorp side, and it is expected that at some point of a time it will also get benefited by the PLI scheme, and that would help it to reduce its current losses in the EV business. Second, on the passenger car segment, the thing is completely different. Currently, as Amar has said, that currently EV constitutes almost 2.5% of the passenger car segment. So it is at the early stage. There is large room for all the players to get accommodated. Whatever the market share loss that we are seeing in the case of Tata Motors and all these things, it is because earlier it was the only player which has been pushing for the EV space, but now the competitions are coming up. As long as the more players are coming up, more models are coming up, it will expand the EV space. And if we are talking about a double-digit kind of a penetration from this EV space by 2030, then definitely it will require more number of players and more number of models, which can expand this market on a pan-India basis. Currently, the EV story, especially in the passenger car segment, is in the pockets where the charger facilities and the availability of the product is there. But as number of players would come, so definitely when Mahindra has introduced these 2 products, in 2025 we will have a multiple product from some other players also. So all this will expand the segment, and the story will be similar to like that of in the scooter segment that we've seen in the last 3-4 years. Same thing we will see in the passenger car segment in the next 3-4 years. And in terms of liking, we are currently considering the stage of the PV segment where PV cycle is somehow moderating. in that space, we are finding that the Mahindra and Mahindra is somehow outperforming the PV space in terms of the growth, backed by its new product launches and the available capacity. So in the PV space, we are liking Mahindra and Mahindra compared to the Maruti.
Okay, so Mahindra Mahindra, top pick in passenger vehicles. I think you said Hero you like best in two-wheelers. What about Ola Electric and the kind of reversal that we've seen last few sessions? Do you see that sustaining?
So Ola is not in our coverage, so we can't talk much about that. But what we can highlight here is that even though it has got listed, it is still a startup company. So it will take its own time to to reach the profitability levels. And even though if this unit is listed, it can't be compared with the performance of the experienced players, because the models of both the companies have been completely different. Ola has its own distribution model, while other legacy players have this outsourced distribution model. So in that case, the working capital management, the cash flow, the EBITDA level, and the capex cycle, all these things are completely different. So we can't compare Ola with the existing listed players. But what we can infer from the Ola's listing is that it has helped in deriving the valuation for the EV players, and based on the performance of the Ola, whatever we have seen in since its listing, so it has been traded at 6x to almost 13x of its FY24 sales. And if we apply the similar multiple to the EV business of the existing players, so we can say that 5 to 10% of the value in the stock price of the legacy players is now coming from the EV business.
Okay, just one point from you, Mr. Seth, that I wanted to get a sense of. Inventory levels was a concern for the industry a month ago. Are you seeing that changing post festive season sales, etc., or are you still a little concerned? Is your association a little concerned with inventory levels, and what are the current inventory levels?
So prior to the festive period, we were looking at around a 70-75 day inventory period across the industry, which is very high. It was not something that we are comfortable with, and that is why FADA was making a lot of noise about it. The festive season has been really good. Has been better than expected, and I think around, if we compare the first day of Navratri to 15 days post Dhanteras, so it has been at 11.5% growth compared to last year, close to 42 lakh total vehicles on the road. And this is Vahan data, so they are registered with the end consumer. This has helped drop the inventory, but not drastically, because the production capacities are installed, so they would keep producing.
Right now, what are the inventory levels right now, Mr.
It would be close to around 65 to 70 days.
So it's not changed much at all, from 75 days to 70 days.
To 10, yeah, it's around a 5 to 10 day drop.
And the total outstanding vehicles, which was 7.5 lakhs the last time we spoke?
Yeah, so that would of course have come down a bit, but nothing drastic about it.
Okay.
Yeah.
Okay. Thank you so much. Thank you so much, Amar Jatin Seth there, and of course Abhishek Gaushinde talking about the auto sector. We'll take a very short break, but we'll be right back with a lot more and tell you about all the top movers and shakers on the other side.
News just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hi, thanks so much for joining in. Good morning to you from Mahima and myself and the team that puts Ask Profit together. Ask Profit is the name of the show, of course, and just like the name suggests, this show is geared towards getting you answers to all of your stock-related questions. This entire week and from this day onwards, of course, we're doing something different. And if you're tuning in for the first time this week, you will soon know what that is. We have opened the phone lines, and the number that is flashing on your screen is where you can call us on. Mahima is back after a bit of a break, and so she's going to be able to speak to you for the first time. Now, if you've got a stock-specific question, make sure that you tell us what the stock is, of course, and what your time period is that you're looking at holding, because that will help us understand whether to take it to our fundamental expert or to our technical expert. On that note, let me introduce our experts for the day. We've got Sunny Agarwal as well as Kush Bora joining in. Sunny and Kush, thanks as always for taking the time. Always a pleasure having you on the program. Kush, let me do something a little different this time, and let me go across to you and to see how you're looking at the market right now. And as I speak to you, we've more or less with narrow gains, and I think yesterday and today, both days, we've seen pretty narrow ranges for the benchmark Nifty 50, but at least the broader end is looking sanguine right now.
Hey, hi Alex. Very good morning to you, Mahima, Sunny, and all the viewers. And kind of excited for this new, addition that you've brought to the show, which is callers, directly being able to speak to you, perhaps to us, through you. But kind of looking forward to that as well. As far as the view on the market goes, I'll take this, the consolidation that we've been seeing for the last two sessions, three, if you include today's session as well. I'll take this. We've had 2 sharp days of, or 2 days of sharp up moves. But what's heartening is that, the Nifty is sustaining above the 24,000 mark. So as long as that is the case, I think we are perhaps in good stead right now. For me, as I spoke yesterday on the morning show, Nifty is along with the stop loss just under 24,000, perhaps 23,900, 950 kind of levels. For the first target was 24,350, which was hit yesterday. But today, since we are a little off that, you could play for that as well. And then the second target from there on is 24,500. So fairly bullish on Nifty. Slightly more on the bank Nifty, and the reasoning is that the 52,300 upper end of the range that the index has, that the banking index has been for about 2 months. Has been breached. We're sustaining above that. So if that does sort of happen and we get a close, one more day of close above the 52,300 mark, you could see Bank Nifty heading towards 53,000 and higher. So bullish on both. Bank Nifty for me has a slight edge over Nifty.
All right, let's start with the first question on WhatsApp, Mahima.
Yeah, the first query is from Prem Kumar, who is from Chennai. Now, he has 100 shares of SML Isuzu, and he's purchased these shares at a price of 1,888 a piece. And he's saying that he's sitting at an approximate loss of 21,900. He wants to know whether he should keep holding it, average it out, or sell. Sunny, I'll come to you for this one. Do you have coverage on SML Isuzu?
Yeah, good morning, and first of all, thanks for having me on the show. Not an active coverage, but passively, what I feel is that the company
Dimethyl ether is another big product, which is about 100,000 tons, which is going to be commissioned by the end of the year or maybe first quarter of the next financial year. And the same, there is a product called N-methyl marpholine, there's isopropylamines. So these are all in the pipeline, the Balaji Amines. And even in the subsidiary, that is Balaji Specialty Chemicals, we could not do well because of the dumping and many other reasons. But there is a big expansions we have planned, as said earlier. There's about we have planned for 750 crores in the 2 phases. First phase will be about 300 to 400 crores, which we already started the land digging, which may take about exactly 12 months from this month. Maybe next December, you will see at least 2 to 3 plants will be commissioning and starting the production in the unit 2, which are again very premium products like cyanide-based products. So looking into all these things, we aim that in the coming 2 years, we should touch about 2,800 to 3,000 crores revenue, and with about 18 to 20% EBITDA margin, should be in a position to maintain.
18 to 20% EBITDA margin with around 3,000 crores of revenue in next 2 years. Now, as you rightly said, so this was actually my second question, that you're doing a lot of capex when it comes to expansion. Now, what is the capex number that you have set in, and how you're gonna fund it?
See, for Balaji Amines, we will be doing about 100 to 200 crores this financial year, maybe first or second quarter. We'll be finishing all the expansions. Those are all meeting from the internal accruals. As far as the specialty chemicals is concerned, first phase will be doing about 350 to 400 crores, in which we may need maybe 50 crores at the end of the completing this project, that we may go for the borrowing. But the rest of the things will be from the internal accruals.
And also on your DMF, so now since the new methyl amines plant is commissioned, I guess in November 10, can you expect, 80 to 85% of utilization when it comes to DMF, number one? And number two, let us know the anti-dumping duty and export for this product.
See, we were expecting now, as you rightly said, about 80% for the rest of the 6 months. We should be in a position to utilize about minimum 75 to 80%. And after finishing this, maybe utilizing the 80% capacity, we will see once again go back to the government for the anti-dumping. Still, we are seeing a lot of pressure from the China for the dumping. That we may go back again to the government for the seeking the anti-dumping.
And also, Mr. Reddy, so one of your clients has come up with methylamine plant. Now, how this will impact Balaji as a whole?
See, anybody comes to see our plant, total plant, you are well aware that say zero debt. We don't have the debt even for the working capital also. If somebody comes, if their capital borrowings and as well as working capital, if you calculate, so those margins itself is enough for me to compete with them. So we have our own plants. We have the forward integration, many products, like as you said, that DMF, DMAC, and dimethylamine ethanol, dimethyl hydrochloride. Many products we have in the forward integration. That's the reason we don't see that any major loss will come to us because of the domestic competition.
Also, you were at active discussion with the battery players, for some chemicals like 2P and NP. Now, have you received any orders? If not, when is the same expected? If you could just tell us what's actually going on ground.
Actually, we thought that these battery manufacturers will start their plants about 6 months back only.
1 second. When it comes to deciding on whether to export or not to export, the government will definitely be more concerned with providing sugar at reasonable prices to the domestic consumer. And that is the reason why probably we feel that the decision to review export opening might actually take place closer to end of February or early March, by which time the sugar season would have panned out. So at this point, and as far as Renuka is concerned, so Renuka is definitely an export. We do export, but that is on advanced license basis. We do a value addition of about 15%. So our export from our refinery at Kandla, that continues quite aggressively. So that's not an issue.
Right. Mr. Chaturvedi, with regards to where crushing is concerned, are you expecting an improvement in the forthcoming sugar season 24-25? Because the crop is expected to be healthy. That's number one. And number two, I think one of your wholly owned subsidiaries has also approved a capex, right, with regards to cane crushing. How is that expected to pan out, and what's the utilization that you're looking at?
No, as far as this next crushing season is concerned, both Maharashtra and Karnataka seem to be having a reasonably good crop. And in fact, the delay in the crushing season probably augurs well for the total sugar recovery as well. So that is positive, and our crushing season has already started, though a bit late. This might spill over into even March or maybe early April as well. So overall, as far as UP is concerned, UP also doesn't seem to be having anything negative about it, though we are hearing some hiccups in terms of a red rot in some areas and maybe lower cane yields compared to what it was last year, but nothing great. So overall, this crushing season should be definitely much better than what it was last year for sure. Yeah.
Okay, and what about the capex that has been approved for the expansion of the cane crushing capacity from 4,000 to 7,000? By when will that be done?
No, in fact, it has already started, and this is largely for our acquisition in Anamika, which is in UP. And that is the reason is that that area is very strong as far as cane availability is concerned. And there's no reason why we should keep it at 4,000. So we are jacking up the capacity to 7,000. And I'm sure we would be in a position to catch the next crushing season. Partly, it will get reflected in this crushing season as well, because this expansion had started a couple of months back. So from 4,000, I'm sure this by the end of this crushing season, we should be at 5,000. And start of next crushing season, we should be at 7,000 plus.
All right. Also, Mr. Chaturvedi, so now because H2 is expected to be better, and you're doing a capex when it comes to growth, and so you're also expanding. Now, I wanted to understand with the capex that you have with H2 being good, where you see growth when it comes to FY25 and also for the long-term perspective, maybe for next 2 years.
No, as far as Indian sugar sector per se is concerned, I think most of the headwinds which we have faced in the last 6-8 months, that should be behind us. And ethanol would continue to be a major driver. And what we are also seeing is that the consumer perception about buying loose sugar is also changing. In fact, the consumers post-COVID are much more concerned about
6%, but look at over the 6-month period has done 25% uptick. So there are these select names which are actually doing really well, but seeing some bit of profit booking in the session today. These were amongst the top losers in trade today on the BSE 500. Now Rajesh Palvia is with us as well. Rajesh, it was looking like the market was building on to some momentum. Somehow today it's come off and trading at the lowest point of the day. It's almost been a trending day down. How do you look at today's action, and what kind of trades therefore come out as a result of that?
Good afternoon, Neeraj. Good afternoon, everyone. So, yes, today's sell-off, especially on the expiry day of this series, it's a really surprise element for the market, as the market was comfortably holding about 20-day moving average since last couple of days. And again, in today's sell-off, we have again, slipped below to that level. Almost now we are negotiating with the major put-based concentration of 24,000 level. I think if we slip further below to 24,000 level towards the expiry, I think further more pressure we could see in the Nifty towards the expiry, and then possible down move can extend to the next important level of 23,900. That's the level can come if we remains further, below 24,000 level. So in the next 1 hour of trade is very interesting for Nifty as at this moment. Again, on the bank Nifty also, we are now slipped below to 52,000 level also. So here also there was a put-based concentration and we have broken these levels. So I think if we remain below to 52,000 level, I think here also some more pressure we could see in the rest of the day. And possibly Bank Nifty may also slip to 51,800 or 750 kind of zone. That's an immediate support area on the intraday or 1 to 2 day trading perspective. On the higher side, the short covering or the call concentration is now at 24,000 and 24,100 strikes. So 24,100 looks like a tough resistance for the day. If we crosses those levels, then some interesting move on the higher side can be unfold. But I think looking at the data setup, I believe that, for the day, 24,100 is likely to act as a supply zone. So I think very select pocket of very select stocks are holding the ground. Most of the stocks have corrected from their immediate swing high. So some of the stocks ideas where we are focusing is still, I think the stock where we are focusing at this moment, that is Biocon. This stock has done well in last couple of days, and still in despite of this volatility, I think Biocon can be looked at to buy. And we are projecting target towards 375 for Biocon. Keep your stop loss around 357. And another stock where we are focusing, that is from fertilizer space, that is RCF. On a weekly chart, falling trend line breakout is there with a volume action. And looking at the overall structure, we believe that RCF can extend its gain. So we are projecting target of 184 for RCF. So here one can deploy some long trade with stop loss of 167.
Okay, interesting. Yeah, Biocon and a couple of others have looked very strong today. Pharma, actually, CDMO / pharma companies getting some orders, Dharmesh Kant, seems to be the order of the day. Biocon is in the green after having done well in the last few days. Laurus is the other one, which has gained quite a bit and is in the green today on a day like this. How do you look at some of these names?
Yeah, Dr. Neeraj, I mean, they are trades as of now, and pharma particularly, I mean, valuations are quite rich, and a lot of policy action may happen over the next 2 months. So we have to wait and see how things pan out. And even a slight 2%, 3% kind of a tariff or something related to that can dent their margin in a meaningful way. And the valuations at which they're sitting out, 10-15% correction can easily happen. So I mean, international exposure one has to, be a bit thoughtful about before getting into out there. As far as domestic themes are concerned, I mean, there the plays are defense, railway, infra, fertilizer. These are the spaces which also has a budget thing related to that. That looks interesting. The only one thing, Neeraj, I would like to highlight here is I was listening to you when you were narrating what has started correcting now. So in the last fall from the top to 23,200 levels, IT and banking were the two sectors which outperformed in the fall, and now they have started participating in this leg of the fall, which is structurally, I think, is not good. If it continues tomorrow and day after, then we are looking at meaningful downsides from here.
Okay. Dharmesh, point, thanks so much for joining in today and giving us your thoughts. Really appreciate your time this afternoon. Just before we get in, a very important voice, Rajesh, one quick word, very, very quickly, Rajesh, on IT, because tech is looking wobbly today. I mean, does today's move open up more downsides, or will this be bought into?
I think in today's fall, the major hit has been taken by the most of the large cap IT stocks, and I think it's again, looking at the near-term, short-term structure, still structure is on the bullish side. I think 42,900 is the important level for Nifty IT index. I think 42,900, if able to hold out, I think some pullback action we could see, but still, if we compare in a whole IT pack, I think still mid-cap ITs are still holding the ground. So I think one should focus on mid-cap IT rather to look at large-cap IT at this juncture. Very few large-cap IT like HCL Tech or TCS are still in the better place compared to all other large-cap IT. So here one can focus, but for Nifty IT, I think 42,900 level needs to watch in this correction. If we hold, then only one should deploy some trades in mid-cap IT as well as in some of the large-cap IT stocks, as I mentioned.
Okay. Well, Rajesh, stay on. Let's get in Pankaj Murarka, CIO of Renaissance Investment Managers, joins us right now on the show. Pankaj, it just seemed that there is a bit of a pull back from the 23,500 levels, which was a bit of a key level. And we getting sold into the strength again. Is this a market which is a sell-on rise until the earnings situation improves? How would you characterize it?
Good afternoon, Neeraj. I think, Neeraj, we are in a correction in a broader bull market. So I think the broader bull market remains very much intact. Yes, the fact is that we had a weak earnings season this quarter, where earnings have been weak, and there have been disappointments in earnings in significant part of the corporate sector, and which probably to some extent is reflecting probably a cyclical slowdown in the economy. Having said that, I still think that from a slightly more medium term, because I think about markets from a 1 year perspective, I still think the India story and the overall outlook remains intact. I think now that we've had this correction, markets need to spend some time. So I think there will be near-term volatility in the market in terms of moves. But I think these are not bad levels for investors taking a 1 year view to probably start investing gradually if they have cash over the next few weeks or next few months. And I think probably once market settles down around these levels, it will get more stock and sector specific from here on.
Pankaj, the feeling that amongst most people is that now the multiples are a bit deceptive, simply because if the earnings numbers for Q3 as well do not improve, then you might not be actually trading very close to long-term averages. You might still be further away from long-term averages. And for a market which is not showing that kind of growth, why should it trade at a significant premium to long-term averages? How do you think about it? Do you think that's a good argument, and therefore could this correction in an ongoing bull market take us closer to 23, 22 or whatever level? I'm not asking you to predict a level, but you get the question that I'm trying to ask you.
Sure, Neeraj, sure. Meaning I don't know where markets will go in the next, let's say 4 weeks or 6 weeks. Markets can correct by 3% or 5% at the index level from here on. But on your first question on the longer term valuation argument, a few quarters of slowdown does not change India's inherent structural high growth, earnings growth and high growth economy, the structural outlook for India. That remains very much in place, that India is the fastest growing economy, and India is also the fastest earnings growth in the region and globally as well. When we talk about long-term multiples, then they're derived basis long-term growth outlook. So I don't think so that long-term growth outlook has changed. Yes, but we have to accept that we are in the middle of a cyclical slowdown. And that slowdown is partly also because of the fact that the government did underspend in the first half of this year, because the first quarter was an election quarter. So everything had slowed down considerably. And once the government got into the office, it took them a while to settle down and get going, kind of a thing. So we've clearly seen in numbers that government has significantly underspent in the first half of this year. I think the government spending will come back in second half, and that should help our growth. So I don't think so growth has, meaning there is a moderate slowdown, but it's not a case that growth has collapsed completely or very sharply in that sense. And these kind of cyclical slowdown can and do happen in economy from time to time. So I don't think so that overall argument of valuation derating for India will play out or that holds. That's not my view. Having said that, we are in the middle of a correction in a broader bull market. Now, where it settles down, I exactly don't know, but it could be around these levels or another 5% lower. But all I know is investors having a medium-term to longer-term view should use this correction to their advantage and probably use it as an opportunity to invest and build their long-term portfolios.
Okay. Pankaj, one last question really. Won't take more time, but we're going to be talking to a sell-side analyst on tech, because that sector is seeing a pullback. Now, is this a sector that's run up quite a bit already, and therefore a bit of a pullback may not be necessarily looked down upon because a lot of things are correcting, or are there some other factors hitting IT?
Again, just to express my views on the sector, I think this is one of the sectors which will lead Indian markets over the next 12 months or 18 months. So I think tech will lead the rally in markets or lead this bull market. As you said, the pullback that we're seeing today, probably I think it's a spillover effect of a weaker NASDAQ last evening. And also given the fact that the sector has done well. Stocks in the sector, even if you look at large cap names, they're up about 20% in the last 2 months or 8 or 10 weeks. in an environment where the market is actually corrected. So while markets are down, most of the tech stocks are near, the large caps are near or have exceeded their all-time high. So the sector is an outlier sector. It's already shown that in the last 3 months. And I think pullback is just a reaction to that. But I think I am of the firm opinion that this correction should be bought into the tech sector, because it's one sector which will actually lead the market next year in 2025.
So is that on the back of earnings growth, Pankaj? I mean, you reckon earnings growth will come roaring back, or is it actually it can't be valuation multiple adjustment, because valuations are almost in line with long-term averages, right? So it has to be earnings led.
Yeah, absolutely, Neeraj. I think there's a clear trend that's visible where discretionary spends globally and in primarily in US have been held back for almost now 2 years. Now that US is already into a rate cut cycle and the elections are out of the window, I think discretionary spends will come back. This has been the feedback or commentary from most of the, like, if you listen to the commentaries of the Fortune 500 companies or top IT spenders globally, they've been making similar comments, and I think some of the early trends are visible as well. So I think globally IT will see a cyclical uplift, or a cyclical IT spends will go up cyclically, starting from which was slow, will start rising next year onwards, and that should drive higher growth for companies. I think probably in the first half it will be more driven by order intakes, and for that to translate into higher revenue and earnings growth probably will be more a second half phenomena, second half CY25 phenomena. But markets are smart enough to draw the trend or draw inferences from trends that they see, and stocks will clearly move ahead of final actually higher earnings growth being shown or delivered by companies, and which is where in that context I see that the next 2 or 3 years earnings growth for tech sector will be probably much better than what we've seen in the last 2 years.
Noted. Great. Thanks a lot. Thanks a lot, Pankaj, for joining in today. Really appreciate your time. That's a large market voice. CEO of Renaissance Investment Managers talking about his view on the markets at large. Not too perturbed. Remember, he's been constructive for a while on the markets. It remains constructive for the long term as well. But IT is certainly taken it on the chin today. Now, Rajesh, I was asking him extensively about tech because that is down about 2.3%. And both the volume action in select large cap IT names and the price action in a lot of them are, if not disconcerting, certainly raises an eyebrow, because it's a very sharp pullback today. Now, we've spoken about IT already, I know, but I would love to know, what do you do with large cap IT? Can you open a fresh short on an Infosys or an HCL Tech or any of the others?
So, as I mentioned, Neeraj, still, there is a profit taking from the higher level in most of the large cap IT stocks. But still, if we analyze on the short to medium term perspective, most of the large cap IT stocks are still holding above their breakout levels, or manages to hold their important moving averages. So still, there is a weakness in today's session, but still, if I analyze for the short to medium term perspective, still strength is there. So I think today is again, expiry day, some adjustment on the Nifty also. So they took IT as a sector to, play with the Nifty adjustment. I think after correction, there would be again, opportunity in some of the large cap IT stocks. I would not open the short position at this moment. I'll wait for further, price action for next couple of days to open the short position, as if we analyze on the TCS, still holding about 50-day, 20-day moving average. So I think till TCS is holding above 4200 level, I think it's an opportunity to buy in the decline. Even HCL Tech just slipped below to its all-time high trajectory. Not much significant correction, and almost now negotiating with its 20-day moving average. So for HCL Tech, the immediate important support area or critical level for near-term trend would be around 1800. If it's break, then one can look to go short in this stock. So I think this is the first day where we are seeing some significant price hit on the IT stock. So I think another a couple of days, another 1 or 2 trading session, one needs to watch for this space, then to open a short position. At this juncture, I think if market stabilize at certain level, I think IT would again, give some pullback from lower level.
Okay, Rajesh, and we focus on this for a moment. I mean, at the risk of doing quite a bit of IT, but it's so important. Sumit Pokharna, VP of Fundamental Research at Kotak Securities, joins us with his thoughts. Sumit, good having you. Thanks for joining in. Why this pullback? Is this a mere corrective move without a reason attached, or am I missing something?
Yeah, thanks for calling me on your show. Yesterday US inflation data has come and the number were not encouraging. As a result, IT stocks have taken a beating on the expectation that Fed might defer the rate cuts. So this is just an expectation based on one particular data which has come, and that is why we have seen Nasdaq under pressure yesterday. And as a reflection of it, Indian IT companies is also sailing through the same boat.
Okay. So is this, how big a negative could this be? Let's assume that, Sumit, that's how the cookie crumbles, that the Fed cut trajectory is out of the way, let's assume. And if anything, if inflation data doesn't look good, then the Fed may even hike rates, let's say in early part of 2025. Is this a new negative development for IT which could take the stocks lower than where they are? Because if that were to happen, the entire bucket will move down, right?
Correct. So we are not taking that as a view as of now.
Okay.
Because central banks, we have not seen they cut rate in 1 year and immediately they start hiking rate. That never happens. They are more stable in their calls. So coming to the demand side of it, which is more important to understand, see, the sector I can divide into 3 parts. One is the IT services company, second is the ER&D company, and the third is the BPO companies. Now, everybody has a different levers based on which the earnings expectation on the demand improvement looks different. So, for example, small companies expect some improvement in demand with healthy growth in deal pipeline, but decision-making timelines are longer. Secondly, if you look at the BPO companies, which believe that clients' prioritization towards cost optimization could lead to increase in outsourcing, and most companies are open to focused inorganic initiative with a clear objective to scale faster, expand market presence, and address the white spaces in capabilities. So, in a nutshell, what I'm saying is some green shoots are available, but we can still not say with confidence that everything has become normalized and we will see a smooth long-term growth trajectory from here on.
With one last question, are you buyer into any of the names at lower levels or at the current levels, large cap or mid caps in particular?
Right. So overall, we are positive on the sector. We will say that you need to be very selective. Some pockets have become very expensive where we are not bullish at all. And in fact, we have highlighted this, that can be a sell. But coming to larger cap IT companies like Infosys, TCS or Tech Mahindra, where we are very bullish from a longer term perspective. So investors can take a bet out there and create a good healthy portfolio. So these dips should be used as an opportunity to build your portfolio rather than getting panicked for one day movement here and there.
To buy, Sumit, what's the top ideas?
So our top idea remains Infosys, and we have been guiding investors that the discretionary demand is improving, particularly in the client-centric regions. So that is quite positive for Infosys, and Infosys has a unique proposition that they have a full stack of services along with TCS also. So they can meet all sort of demand of the clients, and that is why we are bullish on Infosys, saying that any major or meaningful pickup in discretionary spends happen, then I think Infosys and TCS can be biggest beneficiaries of it.
Okay, thanks a lot for that, Sumit. Really appreciate your time.
Thank you.
Yep. Rajesh, I urge you to stay on with us because the markets aren't looking pretty and we need to kind of talk more about it. In fact, as we speak, Rajesh, before we take that break, I'd love to come back to you on the Nifty. I know we just took the view from you 15 minutes ago, but it's about 1.5% lower. Now, is this breaking some key crucial supports, and therefore, is there any further opinion or trade that you would initiate, or would you wait because it's the expiry day and let's see if tomorrow is a slightly different day?
So definitely, Neeraj, it's an expiry day, and we have already broken the important support area of 24,000 level. So I think pressure is likely to be there in towards the expiry. Maybe we could hit the lower band of 23,900, even 23,850 kind of level also towards the expiry, as there is no as such a recovery or any pause for the supply is happening in the market, and most of the large cap stocks are also witnessing hit on the expiry day. So I think we may slide further. We may break 23,900, 850 kind of level, 23,850 kind of level we could see towards the expiry. But again, fresh day on a very first day of December series, there could be again, different day, because market is already light in terms of position, and again the new regime of this derivative changes of option expiry and everything is going to take place for the new series. So I think it's a different series for everyone for the December. So we will take fresh perspective on the first day of December series.
Maybe that makes sense as well. So, yes, it is concerning, as Rajesh said, that the kind of fall that's happened today. But let's see if it's an expiry day thing, and maybe tomorrow is a different day and a different perspective. Important points, I think, both of those. Okay, what we do is take a break. We take a break, come back on the other side, try and talk more about the trade today, the corrective moves, maybe try and talk more about some outliers today. We'll try and focus on those. Stay tuned.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters
passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. It's becoming a bit of a painful afternoon for the markets, except if you are investors in Adani stocks. I mean, it's quite astonishing about how this has become an island of actually green in an otherwise red market. Look at the top gainers right now on the BSE 500, and you will see largely Adani stocks there. Energy, green, energy at a 10% circuit, green, Total, all of them doing fairly well, and Adani Power also 8% up. But on the losing side, a Uflex, Amber Enterprise, I mean, life insurance companies looking extremely painful. Rainbow Medical for second day in a row is seeing that pain. Tata Tele coming off after those wins. I want to quickly check what's happening to Vodafone also. You know, this is becoming a bit of a tough afternoon. Let's speak now with Narendra Solanki of Anand Rathi Shares and Stockbrokers joining us on the conversation. Rajesh Palve, of course, of Axis Securities is with us. Narendra, great to speak with you on the show today. I mean, let me just get your view on the top loser, really. IT stocks taking a beating today. Do you think that this is a trend that could reverse very quickly once the mood changes?
John, good afternoon. I think the IT stocks or IT sector as a basket has been facing the headwinds, and most probably because yesterday we have seen the US inflation data and the kind of outlook which has been right now US regarding Fed rates, plus the geopolitical uncertainties are another headwinds which are making the sector jittery in short term. However, I think that the longer term, medium to long term view is that the kind of deal pipeline and the deal order book we have is solid for a lot of IT companies. So medium to long term, definitely one can stay there. And in short term, I think the headwinds still may be there, at least until Jan till the new president takes over. So I think that there till that time, I think the global headwinds might be there for the sector from time to time.
Rather, some beaten down pockets have really bounced back very strongly. Did you guys, for example, do you guys have coverage on let's say Ola Electric or Mahindra? Both of them, I mean, Ola in the last couple of days, Mahindra in the last 5-6 days have had some very serious moves for completely different reasons, of course. In Mahindra's case, there are launches as well that have happened. Any thoughts here?
Yeah, sure. We don't have coverage on Ola, but yeah, definitely we cover Mahindra, and the kind of numbers you have seen this quarter and the kind of food the management has shared, even the new launches yesterday, which we have seen of their EV platforms. So I think all these new launches are very promising. Even the tractor sales are looking good going forward. The second half, we are very upbeat about the tractor sale and the new launches and the kind of traction the company may get because of these launches especially in the passenger vehicle segment where the competition is strong, and we have seen not very good growth numbers lately. But Mahindra is consistently leading the pack in terms of growth in past few months. And I think that these new launches in EV, especially when the competition is gradually heating up, and the Mahindra is looking like taking a lead in terms of the kind of platforms it is offering right now post these launches. So definitely it gives a strong footing to the company in terms of gathering market share.
Okay. Now, Motilal Oswal has cut its FY25 estimate for Nifty EPS, that's earning per share, by 5%, as earning growth in the second quarter was the lowest in 8 quarters. Rucha's joining us first to break down all the details of that report, after which we have a conversation with Motilal Oswal. But Rucha, why don't you begin?
Thanks, Tamanna. So as you rightly mentioned, they have reduced their FY25 Nifty estimates, EPS estimates by 5%. However, they expect the corporate earnings to recover in the second half, largely aided by 3 factors. Increase in rural spending, aided by wedding season as well, and also a pickup in government spending. Now, talking about stock picks, well, there were 10 winners as they term in the second quarter and would still term as a buy, include SBI with a target price of 1,000, largely because it is a market leader in credit growth. I'll just spell out a few of the 10 list which they have given. L&T, again with a buy rating with 4,200 target, largely on strong execution, and also the margins of the company have bottomed out. M&M at 3,420 target because it is a major beneficiary of an uptick in tractor recovery cycle. Amongst the other names, they also have Sun Pharma, Indian Hotels, Page Industries, Angel One, Amber and Atul, all with a buy rating and still believe could do well in the second half. However, there were 2 laggards in second quarter on which Motilal Oswal have given a neutral rating, and these include Tata Motors on these 3 and look good for the second half, and these include Avenue Supermarts, largely on the back of accelerated store expansion, ABB India, largely to benefit from high growth segments and given a target price of 8,500, and lastly IndusInd Bank with 1,500 as the target price because it is valuations are reasonable but also would need clarity on performance and the management change. So these are the stock and the outlook of Motilal Oswal for the market as a whole as well.
All right, thank you so much for that, Rucha. Now, the author of that report, Gautam Duggar, Head of Research, Motilal Oswal Institutional Equities, with us this afternoon. Gautam, hi. Great to speak with you. I think one big takeaway is that you're hoping or you see Q3 being better than Q2. Let's start with that.
Yeah, Tamanna, good afternoon. Thanks for having me. So look, there's a lot of noise about earnings being weak and, all is lost. So what I wanted to highlight is definitely there is a moderation compared to what we have seen in FY20 to 24, wherein we had a 21% earnings CAGR for Nifty and 26 for our coverage universe. Now, FY25 had obviously begun on a very sort of muted note in the first quarter, and now the second quarter put together. 1H FY25 earnings are flat for our coverage and only 4% growth for Nifty. But there is a disproportionate drag which is coming from commodities. If you remove commodities, then my coverage universe growth moves from 0 to 11-12%, and for Nifty also 12%. Now, if you were to compare 1H versus 2H on a ex commodities basis, there's not much change. First half growth was 12%, next half growth is also 12%. For Nifty, first half growth is 12%, next half growth is also 10%. Right? It's purely because of the changes in commodities on a quarter basis that you are seeing that fluctuation. So if you don't remove anything and look at all the universe put together, first half was 0 growth, second half becomes 9%. And Nifty first half was 4 and second half becomes 7. I'm not trying to deny that there is a moderation and all. There is definitely a moderation. All said and done, first, this will be the first year of a single-digit earnings growth after 5 years almost, from FY20 to FY24. We had every year with a strong double-digit performance. So this is our first year of a single-digit growth. But disproportionate drag coming in both on absolute numbers as well as forward earnings revision from commodities.
The other thing that I found interesting, Gautam, is that you say we're seeing a much needed correction in the market. I mean, I know you don't usually speak in the here and now, but we're also having this conversation at a A slightly violent time, I would say, for the markets this afternoon. Do you think that this is a healthy correction, or are we moving into a slightly bearish territory now?
Look, Tamanna, October was the first month wherein you saw 5% correction, 5% plus correction. The last time you saw that kind of a correction was in March 2020. We all know what was March 2020. It was COVID month. So market has had a breathless, relentless rise, more so in the broader markets than in the large caps. So there has been absolutely no breather in those last 2-3 years. So from that point of view, it is quite good. It is allowing people to think, figure out bottom-up ideas, see where earnings are still strong, where valuations have corrected. Otherwise, what was happening was till about last quarter, the market was very, very forgiving on an earnings miss also. You saw June quarter. If you missed the earnings estimate, stock didn't react much. So October quarter in that sense was very, very democratic. If you had a good numbers, market rewarded. And if you posted a bad numbers, obviously stock saw severe punishment, which is how it should be, right? Because ultimately the valuations are a function of underlying earnings delivery. So that's quite welcome in my view. That said, valuations are still expensive for the broader market. Midcap index is still trading at 30 times, small cap index at 23 times. Only index which has become more reasonably valued and offer now an upside opportunity is Nifty 50, which is basically large caps. So if you look at Nifty 50 valuations now, on FY26 basis, now we are below 20 times. So that's a very interesting valuation print now. Till about 3-4 months back, we were at 22 and a half times even for Nifty. So the starting valuations were becoming a bit of a problem. Now at least that problem has been sorted to an extent, at least in large caps, and which is why we thought the need to put out that report, wherein we highlighted across sectors that in an otherwise muted earnings season, which are the stocks, which are the sectors which have still delivered fantastic numbers and where valuations are still okay. So that's why we called out that list of winners and laggards.
Gautam, so here's the question, right? Good afternoon, Neeraj here. Here's the question. Will markets, let's assume the markets don't deviate too much from these levels. You said that the Nifty 50 is now maybe okay, right? So let's assume it doesn't deviate too much from these levels. Will the list of companies which are showing growth give positive returns? A number of times in the past, right? 11, 2012, I think 17 as well, when the markets may have flatlined, but individual pockets did really well.
I agree, Neeraj. The market will become more narrower in my view. So typically what happens when earnings growth gets narrow, the market also becomes narrow, right? And we are entering that phase now, wherein till about 2020 to 2024, 4 years, we had fabulous set of earnings. Whichever index you take, large cap, mid cap, small cap, Nifty 500. Now the earnings growth is becoming a bit narrower. The sectors which are delivering growth are tapering, that number is coming off. And it is a very expensive market in the broader market. So typically this is a very potent combination for market also to narrow then, because if your sectors which are delivering consistent earnings growth are lower in number and valuations are high, that's a natural consequence. To your earlier point that what if market remains in this region for another couple of months, that will be wonderful. If you look at Nifty, say in March 25, which is what, 3 months now from here, if you're still in this 24,000, 25,000 territory, then you're creating a very solid foundation for consistent returns over the next 2 to 3 years. All of this is assuming we are assuming that numbers will not get downgraded much. So if we are right now at about 1240 rupees of EPS, let's say we remain in this range, because it's very difficult to pinpoint a number. Let's say there is plus minus 2-3% here or there. We are, in a worst case, go to 1200 and Nifty is 25,000 in March 25. Then obviously the probability of generating decent double-digit returns over the next 2 to 3 years goes up manifold, right? But these are all unpredictable things. We are talking 3 months and 6 months. Every day is a different day. Today, out of nowhere, you saw all this geopolitical eruption and market has reacted. So very tough to pinpoint numbers. I'm just talking about broad equations which are possible given the current earnings and the potential valuations.
The geopolitical eruption that you're talking about, what do you think are the concerns there?
I think, see, it basically increases the equity risk premium. I don't understand much about either Russia, Ukraine, or Israel, Hezbollah, or Palestine, or any other conflict which is going on right now in the world. Very little understanding of that. All I know is when such news flow comes every few days, the equity risk premium goes up. And you've had a very important US election. So, how the new administration shapes up the policy, what route do they take after 20th of January? That is anyways keeping some investors nervous because the flows are reflecting that. Between October and November now, you've seen close to $15 billion of selling. It's obviously a different case that we've had equally strong domestic retail inflows, which has absorbed all this selling. By the way, Neeraj, I think if you look at the relative correction in indices, very rarely you would have seen that mid-cap and small-cap indices have corrected almost at similar magnitude versus large cap. Typically, in the past episodes of correction, you would have seen if large caps correct 10%, mid cap, small cap obviously correct much higher. So this time that is not happening, and that is also a reflection of very strong domestic flows, which is absorbing this selling more so in the broader market. So your large cap is also down 10% from the top, mid cap, small cap index is also down 10% from the top. So Tamanna, I have no clue where the geopolitical problems will settle. I'm taking it as a business as usual now because every point of time, something or the other keeps going wrong on geopolitical backdrop.
No. So that's I think something we live with.
Europe is doing okay today.
Yeah.
So European markets are actually trading well and truly in the green. This is also seems to be a bit more expiry led because no quite
possible. Yeah.
Yeah. No shakes out there at least. So that's maybe not a bad thing.
But Gautam, just wanted to come to the list of gainers and laggards that you have earmarked, and I thought that was interesting as well. And while we'll talk about some of those specific ones, and why don't you start by talking about what you like, I just want to ask you whether you're seeing enough companies showing that earning growth potential right now. Is it getting tougher to find and hunt these names?
No, so Tana, even if you find enough companies with decent growth potential, you have to weigh that versus the valuation and starting entry fee that you are paying for that growth, right? Because then you are leaving yourself no room for any error, because then you are fully priced, there's no margin of safety, there is no room for execution error. If you look at the list of 10 ideas that we have, barring 3 companies, rest are all below 30p on FY26, not FY27, right? If you look at the earnings growth for those 10 companies, the projected FY24 to 26, again, I'm not talking about 27, so 24 to 26, you will see most of those companies barring SBI have more than 15% earnings growth. And if you see the ROE column, you will find that almost every single company there, barring Atul, has ROE upwards of 17%. So those list of winners that we culled out is a combination of 3 things: earnings visibility, a very strong balance sheet, which is reflected in ROE, and at the same time, you are not overpaying too much, right? Some of those stocks are definitely expensive, names like Page, names like Indian Hotels, but then we are looking at a much stronger growth out there, right? So we try to create a blend of these 3-4 things put together so that irrespective of where the market goes, hopefully the stocks outperform.
All right. Thank you so much, Gautam, for joining us today. Gautam Duggar there, HOR, Motilal Oswal Institutional Equities, talking about how there is still a lot of opportunities out there. I mean, you have to hunt for them a bit today. Rajesh Palvia, just, before I get to your Btst call, any call on the index? Because you did see the Nifty dip below the 23,900 mark as well. What would be your index call for tomorrow?
So I think the correction or what we can say, the expiry related move is already done for the day. And I think 23,900, 23,850 is the important level for this correction. And Nifty able to hold above 23,850 on the expiry day. We believe that some pullback action would be there in tomorrow's session. So one can go long with stop loss of 23,800, upside target again 24,050 to 24,100, because 24,400 may act as a supply zone. So we are keeping our target a little lower. So 24,050 to 24,100 would be the next target for the Nifty. I think those who are option trader can look for next weekly expiry option for Nifty of 24,000 strike, which is now trading at around 198 rupees. Here one can buy with stop loss of 155, upside target 250 to 260 for this call option. Bank Nifty is looking quite outperforming compared to the Nifty, and I think here there is still strength, and we believe that the way Bank Nifty is managed to defend this 51,800 900 zone, I think here also some pullback action would be there. So here also one can keep a stop loss of 51,800 to go long for upside target of 52,300. That's the target we are focusing for Bank Nifty also. So maybe on a very fresh day of December series, we could see some pullback action as correction for the day is almost done and expiry related move is already played out.
So you should perhaps be prepared for an up move tomorrow. What are the two top picks for Btst?
First one is GNFC, some traction in fertilizer space. So GNFC is looking bullish. The way stock is moving in last couple of trading sessions, series of higher high low is taking place in this stock. So I think the GNFC can be looked at for BTST point of view. Upside target 634. On the downside, one can keep a stop loss of around 607. Another stock is from real estate space, that is Arvind Smart Space. It's a mid-cap company, small cap company actually. So stock is continuously moving in high top, higher bottom formation, almost enjoying near to its all-time high trajectory. Arvind Smart Spaces, we are projecting target of 1,065 with stop loss of 990.
Okay, well, those are some BTST ideas as well. What's doing very well, and of course I would want the view of Narendra later on it, but the Adani Group stocks rising for the second consecutive session, and amidst the market which is collapsing, those stocks are actually doing very well. Agam is here to tell us why. Agam.
Right, well, we have more and more investors coming and coming out in public, expressing the support for the Adani Group companies, especially after following that latest episode that we have with respect to allegations around the group. And the latest, we have Abu Dhabi's IHC, which in fact has said that they are unworried about the ongoing issues currently, and they remain invested. There's going to be no change in stance in terms of their investment either. Well, they in fact have, and I quote their release, "Our partnership with Adani Group reflects our confidence in their contribution to green energy and sustainable sectors." Do remember that Abu Dhabi's IHC had in fact increased their stake in Adani Enterprises to over 5% just back in October 2024. And besides that, they have also expressed overall confidence in the group to come out of this specific area of crisis as well. And well, while they do suggest that they continue to evaluate relevant information and development, for now, they remain invested in the company. And this is, of course, one of the many other reasons behind the gains in Adani Group companies, which is also an island of green among markets which is otherwise wilting under pressure.
It is an island of green today under pressure. Narendra Solanki, just as we wrap up the day's trade, do you see this as a storm in a teacup, or with a recovery tomorrow, or would you be a little more careful for the next couple of trading sessions?
Yeah, looking at the kind of decline today, I think we may see a stable to flat market. But overall, our view is that we might consolidate for next couple of weeks. As I said, from a FI point of view, December could be a low kind of a selling mode. So we might see a decline in selling. So that might hold up the markets and risking the further decline. But the volatility may continue, and we may consolidate till January, wherein the new administration takes up, and then the policy news gets much clearer. So for tomorrow, I think we should stabilize and pick up from today's close.
Okay. What is it that is the part of your list currently, Narendra? Yeah, let's say not like a list of 20 names, but if you had to bet on one or two stocks which you would look to buy into this correction, which you are telling your clients to go out and buy, one large cap, one mid cap, two names.
Yeah, If I have to say one last step, M&M and Power Grid are two stocks which either of them can be bought out. And Midcap is Zen Technologies, which you can see further earnings improving up as they do forward and backward both kinds of integration. Plus, they are adding more products offerings to their kitties.
Narendra, I'm sorry, but Dixon isn't exactly a mid-cap. I mean, yes, it's not a part of the Nifty, but it's not a mid-cap really. So let's talk about a smaller name.
Okay, so Tejas Networks and Data Patterns are two of our
Why
picks.
Tejas? Why Tejas?
See, the kind of deal pipeline, if you see, they almost have 4,500 crores of order books, and the kind of traction they are getting in the BSNL deal, plus the PTN network deal also that they have got from other players. So the future growth runway is very good, and the base is still, as from our view, is still very small, and there's a large ramp up of growth that could happen because of 4G and 5G implementation. And the railway orders also, wherein how much orders which we could get going ahead. So all these kind of orders are very promising for the company, and this can give good growth to the company for next 2 to 3 years.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this afternoon. Hopefully tomorrow is a better day, Rajesh. As you said, the new day of the new series, will take it with newer hands. But for now, I mean, not at the lowest spot of the day, but certainly 1.3% lower isn't exactly music to the ears. So bad day, you would argue that, and this is despite the banks really not correcting so much because IT has cracked. IT is down about 2.5% or thereabouts. 2.25%, and this is the real culprit. Then I wonder if the market breadth is looking adverse as well.
Well, we should pull that up because, you know, you've seen a bit of recovery in the last 10-15 minutes of trade, and the market breadth is not that bad. I mean, that gap narrowing, but definitely more green than red. Let's look at the broader markets very quickly before we pull up the heat map as well. Flat over there, but at least some green. Same for the small cap stocks, at least definitely doing better. But the Nifty heat map, I suspect Neeraj will show a lot of IT and yes, the life insurance companies.
Yeah, it's very interesting to see that these guys haven't created wealth for so many years, and every single point of bad news for these stocks correct. So SBI,
regulatory overhang.
Regulatory overhang, yes. So down. IT is certainly down because Infosys is out there, HCL Tech Mahindra is out there. There is weakness in Adani Ports, interestingly, today, despite the fact that Adani Enterprises and a clutch of other Adani Group stocks have done well, but not too many winners. I think that's the problem for the market today. A lot of stocks have seen some serious profit booking in the second half of trade.
I think profit booking is the right word because look at M&M. And even IT stocks after a good run up seeing that profit booking. Let's just quickly pull up the gainers and losers on the broader markets, the BSE 500 before we wrap for the day. And here is where you see the Adani Group stocks standing out as an island from Total, Green Energy, Power and what have you. On the losing side, an amber end, SBI Life, again regulatory issues there, HDFC Life, some of them that have seen a bit of pain. Suffice to say, if this is a problem with expiry or expiry, induced kind of pain, then hopefully it'll be behind us tomorrow and we can see a spot of TGIF. So we're definitely looking forward for that. But that's all the time from Neeraj, me and the team who put the show together. Thank you so much for watching.
Altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying.
Sensex closes over 1,000 points lower and Nifty falls 1.3%, dipping the most in over 3 weeks. Most sectoral indices close lower, with IT dragging the most. Most Adani Group stocks continue to rise for a second straight session at over 65,000 crore to market cap. Adani Green and Adani Energy locked in upper circuit, and Adani total surges over 19%. Abu Dhabi-based international holding company's outlook on investments in Adani Group remains unchanged, says it will remain invested in the Adani Group amid US indictment. In a move designed to protect investors from false promises of sub-brokers, SEBI tightens rules and eligibility criteria for authorized persons. Luxury market in India is booming, and Audi dips its feet again into the pool with the launch of the Audi Q7 facelift. Audi India head says expansion will be at the highest this year. Maharashtra's political drama doesn't seem to end. Eknath Shinde, Devendra Fadnavis and Ajit Pawar to meet Amit Shah today to decide Mahayuti's CM candidate for Maharashtra. Hemant Soren takes oath as the 14th Chief Minister of Jharkhand after Jharkhand Mukti Morcha-led coalition won the state elections by securing 56 out of the 81 assembly seats. Warren Buffett donates $1.1 billion and reveals wealth distribution plan after death in a letter to shareholders, expresses confidence in his children to handle gradual distribution of his Berkshire holdings. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Now, here's an NDTV Profit exclusive for you. From protests by pilots and cabin crew to furious complaints about poor staff behavior, Air India has struggled with one controversy after another since the Tatas took over the airline. my colleague Vishnu Som caught up with Campbell Wilson, CEO and MD of Air India, and began asking him about how he tackled these issues. Take a look.
Put it in context, there's 30,000 employees in the new Air India group. There were actually 5 groups of employees because the Indian Airlines Air India merger was never fully consummated. And so we had to bring all of this together. Now, in the global context, airline mergers can take 5 to 7 years. This has been done in a little over 2. And when you bring different employee groups, different terms and conditions together, you don't pick the best of everything, but neither do you pick the worst. And so there is a mix of pluses and minuses. Now, if you look at individual elements, some people can say this is better, some people can say this is worse, but on balance, I'm absolutely convinced that it is better. Right. For each individual group. And I think more so, the opportunity available to people is much, much greater than it was ever before, simply by virtue of the fact that we've got so many aircraft, there is such ambition to grow, there's such ambition to improve the product, that the opportunity for personal and career development is unparalleled.
Yeah. And yet there are problems which suddenly emerge. There is social media, which I know has been a bit of a nightmare for all airlines. When you've got, for example, flight crew complaining or cabin crew complaining and saying, look, this is a broken aircraft. There's been some Facebook posts of late, and that is deeply problematic. And look, they aren't serving even a proper glass of water. You're a forward-facing industry and a public-facing one at that. When you have challenges like that from your own staff, does it not represent a huge challenge?
Well, our cabin crew, our staff, want to operate a product that they are proud of, that allows them to provide the service that they want to provide. And it's fair to say that particularly the legacy aircraft that we inherited were not up to that standard. And it just takes a long time. We committed $400 million to buy the seats, to refurbish those aircraft. The seats have been in the certification and manufacturing process since then. They will start to be installed on the wide-body aircraft next year. About a third of the narrow-body fleet are already done. But it will take a while to bring the legacy aircraft up to that standard.
Well, you can catch the entire interview at 5 p.m. and 9 p.m. on NDTV Profit. Moving on, Sensex closed over 1,000 points lower and Nifty fell 1.3%, dipping the most in over 3 weeks today. Most sectoral indices closed lower, with IT dragging the most. Neeraj Shah joins in with a wrap of all the market action.
Well, below 24,000 is the right term, simply because for the last 2 or 3 days, everybody thought that this 23,500 voodoo is behind us, only for the markets to surprise today with the kind of move that it made. With IT really being the bugbear, 2.25% lower for the Nifty IT, and that was the telling participant today. But I must say that it was the last day of expiry, and tomorrow could be a completely new day. Look at the market today. Almost everything on the Nifty was in the red, save for 3 or 4 names, and Adani Enterprises one of them, and then Cipla, SBI, etc. Everything under the scanner today. Life insurance, IT with TCS, Infosys, HCL Tech, Mahindra, all of them down in trade, and even Adani Ports cracking 2.7%, while the rest of the Adani Group stocks did really well. So a lot of cloud on individual names, maybe expiry-led moves today. Frankly, look at the Nifty 500 and you will see that Adani Enterprises, Adani Total Gas, Adani Green, etc., everything in the green, but for Adani Port. So wonder if it was a forgettable day for individual names, which might get changed tomorrow. ITI, HEG, HLE, Glasscoat amongst others which did well. What didn't do well, SBI Life, regulatory overhang on a lot of these insurance names, certainly in the session today. There was some correction in Amber Enterprises on a brokerage note. But aside of that, not too many winners, not too many standout names. Maybe tomorrow is a different day, and maybe starting December series on a positive note might be something that the street could live with. So I think that is something that we'll get to know tomorrow. But for now, yes, below 24,000, but let's see if this is just a day's play.
Right, Neeraj, thanks for that. Now, Adani Group stocks were on the rise for second straight session as the group's market cap rose over 70,000 crore rupees to 13.25 lakh crore rupees. Along with this, the Abu Dhabi-based international holding company's outlook on investments in India's Adani Group remains unchanged, and they said it will remain invested in the Adani Group. So, Agam, tell us, what is the company saying exactly?
We have more updates from many other investors who continue to remain invested in the Adani Group companies. And in the latest, we have IHC of Abu Dhabi, who suggests that they are also unworried and unperturbed with respect to the latest updates around the Adani Group, and they will remain invested. In fact, they do show a lot of confidence in the group as well. Well, on account of this, we have further gains, and while the gains are not as substantial as what we saw yesterday, something like an Adani Enterprises did advance by as much as 2% today. We also saw gains in Adani Ports. Among the other Adani Group companies, we saw sharp advances continue to come through for an Adani Green, an Adani Energy Solutions, as well as Adani Power. All of them up and about in trade and advancing with good volumes too. The question is, does this recovery stay on its path, and can we in fact see the entire Adani Group recover all the losses that they have made through this entire episode? That's a wait and watch.
Thanks for that, Agam. When will American overreach stop? Norwegian diplomat and former UN Environment Program Executive Director Erik Solheim has questioned the US government report on the Adani Group. Solheim pointed out that the allegations lack evidence of actual bribe payments or involvement of top Adani leaders. Solheim also said that such actions by US authorities hinder India's green energy transformation and disrupt one of the country's largest economic powerhouses. Moving on to the next story, M&M has zoomed 9% in a month and the stock has nearly doubled in a year. But what's aiding the growth exactly, and is this growth sustainable? Well, Hiral joins in with a deep dive on M&M.
If you see in terms of M&M and the stock price performance, yes, 9% in the last 1 month, nearly doubled if you see in terms of the last 1 year as well. But let's just compare M&M with regards to the other auto companies. If you see in terms of the growth, specifically from volume terms, strong numbers coming in there. If you see the volume mix, the automotive part, that's seeing a significant increase. From 61%, it's gone up to 69%. And to be noted that automotive as a division is a high margin division as well. If you see in terms of volume revenues as well, the largest in terms of revenues from an automaker that we're looking at, 4.48 lakh crores is what we've seen, and it's now come to 9.88. Again, the revenues have also doubled for an M&M. Moving from there on, now what is it that is aiding growth? Firstly, the positioned EV offerings that they have against, they've positioned their EV offerings to the top luxury car makers. That's one of the reasons that we will see that uptick that will come in. The pricing is absolutely competitive with regards to where EV goes. Thirdly, if you go to see in terms of the waiting period, that has seen a significant downtick, and the demand for SUV, as we know, has always been really strong, right? And this is one of the major reasons. Moving on, if you see in terms of operational enhancements that they've done, that is what is leading to this kind of growth, and the strategic foresight that they have in terms of scaling manufacturing capacity, capabilities. Because overall, if you go to see, capacity was a major constraint for M&M. Waiting periods used to go probably into 17, 18, 20 months as well for few of their models, and that has come down now. If you see SUV sales, as we are talking about the demand as well, in October 24, 54,500 units is what they sold, whereas it's come up from 40,254 in just this year. So that's what is driving growth. Talking about capacity addition, monthly they had a capacity of 19,000 units in 2020. They bumped it up to 49,000 units in this year, and now they're targeting 64,000 units monthly in 25, and in 26 72,000 is the number that they're looking at. Plus, if you see in addition what the capacity are they going to see, EVs is going to be probably 10,000 units per month by March 25. So that's the kind of growth that they're anticipating as well. Back of which, if you talk about brokerages, Morgan Stanley, Nuvama, Motilal Oswal, all of them have an overweight. Target prices ranging between 3,336 to 3,420. So that's the view of the brokerages as well. But very lastly, what are we going to watch out for from here on? Now, will Mahindra XUV 9e be a challenger to luxury electric cars, right? Because that is going to be a key from here on, because they are betting really big on EV. 2, whether they are able to meet their capacity addition plans as well. Because if that does not happen, your sales will again slow down in the SUV space. And thirdly, how much further can M&M reduce the waiting period for the SUV? So these are key things investors should be watching out for. Brokerages so far, with what the management has said and the performance, have been absolutely upbeat.
The Audi Q7 facelift has been launched in India with introductory prices starting at 88.66 lakh rupees. The higher spec Q7 technology variant has been priced at 97.81 lakh rupees. This is the second facelift for the current gen model that debuted in 2015. Audi India's CEO Balbir Singh Dhillon said that the Indian luxury car market is booming. Let us take a look at the newly unveiled luxury car.
Audi India has launched one of the most successful SUVs, the Q7. This is a facelift, but it's an important one. Audi tells us that out of the 1 lakh unit it has sold in India till now, 10,000 units have been sold of Q7. So that establishes the importance of Q7. Now, because it's a facelift, not much has changed, but there are few changes which make it a little prominent. One of the most important one being this octagonal grille. Now it gets a new treatment, vertical slats. Earlier it used to have horizontal slats. You also notice this 2D Audi logo, which is the new logo that Audi has adopted, which makes it look a little bit more modern. Of course, you can not miss the LED headlamps. These are matrix LED headlamps. The DRL also acts as turn indicator, and the DRL also makes a very interesting graphic on the top. Looks quite interesting. Now at the bottom you will see these big air dams here, piano black material, then that is encapsulated by a C shape of almost matte finish silver, which you also notice as a skid plate treatment here. Looks interesting. And on the side now you get a 20-inch alloy. Audi uses these a little simplistic look to their alloys, and that's what you get here. But these are 20 inches and the profile of the wheel is 285 by 45. So you get these broad wheels as your tires. Now, there are some interesting changes on the inside, but before I take you inside, let me take you on towards the rear and show you how does it look from the rear. It's a big SUV. There's very interesting looking tail lamps. They are big, chunky, and have these vertical slats again here, which looks very interesting. Towards the bottom, you will see the rear bumper. Again, a lot of silver being used here. This matte silver looks interesting and gives a look of a proper skid plate. Then you also get these exhausts. These are real exhausts and they look quite nice. The Q7 badging in the black, and again the 2D logo here of the Audi Q7.
Market regulator SEBI has issued more stringent rules for sub-brokers. These are the people who reach retail investors in Tier 2 and Tier 3 cities and convince them to invest in the equity markets. They now have to write a qualifying exam, and the parent company will bear liability for any defaults. My colleague Charu Singh is joining us for more details.
The sub-brokers, who are also known as the authorized persons, are basically the representatives of brokers, and the qualifying criteria for them currently is that they should be above the age of 18 years and that they should be, having the qualification of at least 10th standard. Now, this is something which makes it very easy for anyone to, sort of come and say that yes, I can be an authorized person, and to sort of protect the investors from being influenced by people who are themselves not qualified enough. SEBI has sort of started consulting and started preparing a consultation paper, proposals basically to make the qualifying criteria for these authorized persons more strict. Now they'll have to be, the proposals might say that they should be a graduate with 3 years of experience, and if they do not have a graduation's degree, then the number of experience years in the market should be increased, and the brokers whom they will be representing will be completely liable for any default on part of the authorized persons. Now this is something that the brokers industry is also a little divided about. Some of them who drive a lot of business from these APs say that the complete liability should not be upon the brokers, whereas the others say that investor protection is foremost, and that is why such regulations are the need of the hour. Apart from this, the amount of deposit that has to be given by the APs to start this job will also be increased, and the qualifying exam with NISM might also be introduced. So let's see how these proposals roll out. The current timeline that has been told to NDTV Profit is from 1 week to 4 weeks. So maybe within a month or half we'll be able to see these proposals. Hopefully they have been in the pipeline for around 2 to 3 months now.
Thanks for that, Charu. Godrej Enterprises announced a major brand repositioning, unveiling a refreshed identity centered around a distinct purple logo. NDTV Profit's Vikas Srivastava caught up with Jamshed Godrej, the CMD of Godrej Enterprises Group, about their expansion plans and the way forward for the company after the rebranding. Listen in.
Well, first of all, we had a realignment of our shareholding. It was not a split, if you know. I think it's that colloquialism is not the right word to use. Right. I think the point is that after Godrej Enterprises Group has been set up, we feel that we need to present ourselves in a new way. So the logo remains the same as it has for a long time. The color changes, and it represents what we want to represent, which is a forward-looking premiumization, etc. in the company.
While the political drama doesn't seem to end in the state of Maharashtra, even after the election battle has ended and results are out, Eknath Shinde, Devendra Fadnavis and Ajit Pawar are to meet Home Minister Amit Shah today in Delhi to decide Mahayuti's CM candidate for Maharashtra. Eknath Shinde held a press conference yesterday to announce that he will not be a part of the CM race. He has given the power to Prime Minister Modi and Home Minister Amit Shah to decide who will be the successor to him. Now, this has now raised a lot of questions, but mainly on who will BJP choose as their next CM. Hemant Soren takes oath as the 14th Chief Minister of Jharkhand today after his Jharkhand Mukti Morcha-led coalition won the recently concluded state elections by securing 56 out of the total 81 assembly seats. This will be the 49-year-old's fourth stint as a chief minister of the state. Soren retained his Badhayat seat by defeating his BJP rival Kamliyal Hembrom by a margin of more than 39,790 votes. In these elections, the JMM achieved its highest ever tally, winning 34 of the 43 seats it contested. Now, in a post on X, Soren called his swearing in a historic day that will further strengthen our collective struggle, the spirit of love and brotherhood, and the commitment towards justice. The Indian Meteorological Department says that cyclone Fenijal is expected to cross the North Tamil Nadu and Puducherry coasts by Saturday morning. Wind speeds are likely to be 50 to 60 km per hour with gusts reaching 70 km per hour. The IMD also mentioned the deep depression could become a cyclonic storm today. A yellow alert has been issued for Chennai and nearby districts, and heavy rain is expected. An orange alert has been given for the Delta districts as well. Cuddalore and Mayiladuthurai in the Delta region are likely to experience very heavy rainfall today with over 24.4 cm of rain expected. The ICG or Indian Coast Guard is coordinating with Tamil Nadu state agencies to ensure the safety of seafarers. Now, the Indian Navy has successfully test-fired the K-4 ballistic missile, which has a range of 3,500 kilometers. It was launched from its newly inducted nuclear submarine, INS Arighat. Now, this test fire proves India's ability to launch a retaliatory strike if needed. More tests of the missile system are planned. Currently, the Navy has two nuclear submarines, INS Arihant and INS Arighat. A third submarine of this type has been launched and is expected to join the Navy next year. The K-4 ballistic missile is designed to be launched from underwater platforms and is a key asset in India's weaponry. Adani Port has signed a supplementary concession agreement with Kerala to enhance the Vizhinjam seaport development. The first of the 3 phases is slated for commissioning next month, and the second and third phases will be nearing completion by 2028. The next story, amid ongoing protests and attacks in Bangladesh, the Ministry of External Affairs has stated that it is Bangladesh's responsibility to protect the minors. India's External Affairs Minister S. Jaishankar discussed the attacks on religious minorities, including Hindus, in neighboring country. Now, this includes the arrest of Chinmoy Krishna Das Brahmachari this week and the vandalism of a temple in Chattogram district. Following his meeting with the Prime Minister, Jaishankar addressed the Parliament as well. Warren Buffett has donated Berkshire Hathaway stock worth over $1.15 billion, which is around 10,000 crore rupees, to 4 family foundation. Now, he also shared his property distribution plan. The 94-year-old investor donated 1.5 million shares to the Susan Thompson Buffett Foundation, which is named after his late wife. While a significant portion of Buffett's wealth is pledged for philanthropy, his 3 children will also inherit part of it, having already received $10 million each. Now, after his wife Susie's death, 96% of her wealth was also donated to her foundation. Well, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration.
Who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything mutual fund related. Some parts of this show get you to speak or listen to the fund managers who manage your money. Other parts of this show give you a sense of how you should manage your portfolio. Today's episode is going to give you some parts of both of those. In the first half, let me introduce my guest. We've got George Thomas, who's the fund manager equity at Quantum AMC. George, thanks so much for taking the time. Pleasure speaking with you on the program. And the reason I wanted to speak to you today is to try and get a sense of how you're managing your portfolio and the cash that you have, because you were one of the fund houses that took a very clear position that you were not going to deploy when the markets were a little hot. And at the end of October, compared with earlier on in the year or at the start of the year, your cash position as a fund house as a whole had doubled from around 4.5% to about 10%. So can you give me a sense of why you decided to do that and what you've done over the course of the last month?
Sure. Thanks, Alex, for having me on the show. So one is most of the times the headlines focus on the cash levels which we hold, but underlying the cash, so the cash is an outcome of the process which we follow. So for instance, I would talk about the Quantum Long-Term Equity Value Fund, which follows a value strategy, and that has the largest AUM. But of course, we have similar processes in other funds like small cap fund, and that's the reason you're seeing those higher cash level across the multiple funds. So when you talk about the value fund, so for a stock to enter the value fund portfolio, the primary criteria is we should get that stock at a discount of at least 25% to its 2-year forward intrinsic value. Intrinsic value is basically the fair value which we estimate the stocks should be valued on a 2-year forward earnings power. So in that case, let's assume if a stock has a fair value of 100 rupees as of 2 year forward, and if that stock is available at a value of 75 at this point, we would be happy to add that to the portfolio. So what that means is over a 2 year period, you would get a return of 15.5%. So while following this process, we have a strict buy limit. The example which I said, the buy limit is 75 rupees and the sell is 100 rupees. So if a stock falls below buy, so it would make to the portfolio. And when a stock crosses the sell limit, which is 100 rupees, the stock, we would start trimming that stock. So typically what happens is in a bull market, so a lot of our stocks would be hitting those sell limits. And as a result, we would start trimming those stocks. And most likely in this kind of a scenario, so it's unlikely that many stocks would cut to the portfolio, which has those threshold upside potential, upside limits. And that is the reason you wouldn't see us deploying that cash incrementally to new names. So this is the background of what you see as a higher cash level. And of course, how this helps us is let's say in a bear market or a market downturn like COVID, in March 2020, our cash level was just about 2%. So when market corrects rapidly, we would be able to aggressively deploy at reasonably good valuations. So and these cash levels have gone up to as high as even more than 30% during the Modi euphoria. And we have been able to deploy aggressively as well as and when the market gives opportunity.
Okay. Has that opportunity been found, though? That's the question. And some part of this is also related to the way that earnings have panned out in the quarter gone by. There have been more misses than in past quarters. And so give me a sense of how you found that. And have you been deploying? Have you used the drop that we saw on account of the selling that foreign institutions have undertaken in the previous month to deploy some of the cash that you held?
Right. So if we were to look at a background of how the earnings panned out in the recent quarter, so in the last few years, last fiscal year especially, we saw reasonably good earnings growth primarily because of margin expansion, because input prices had shot up post-COVID and then they had kind of corrected over the course of the last year. And that gave corporates a room to expand margins in the last financial year. So when we come to this year specifically, we are sitting at a high base of earnings. And that by itself optically would show a weaker earnings growth print. So on top of that, in the base quarter, there was more festive sales which happened, which was split between 2 quarters in the current year. So those are the reasons why those earnings growth did not pan out as per market expectations to our mind. But based on the channel checks and management interactions which we did, so we do not perceive that the underlying fundamentals has gone deteriorated quite materially. But having said that, we have had a reasonably strong rally in the last few years. And therefore, because of that, valuations still remain expensive in most part of the markets, barring very select pockets. So in the last month specifically, if you ask me, we have marginally deployed some bit of cash, but cash levels are more or less similar to what you saw in the last month as of October end.
Okay. So that gives me an answer to say that there are still elevated valuations by and large. But I'm just curious about where you saw the opportunities, in which areas or which stocks. Yeah, I guess that you can't speak about individual stocks per se, but if it's in your portfolio, perhaps you can give me a sense of where you've doubled down on the kind of investments that you've made.
Sure. See, the obvious value bet at this point remains to be the private sector banks. So some of the large private sector banks, they have fairly strong underwriting standards and quite a strong franchise as well. But in an environment where credit cost or that NPA cycle is benign across board, those kind of differentiation does not come out. And some of them are trading at decadal low valuations. So as our sense is, as and when that earnings, as and when that credit cycle normalizes and the system liquidity improves, some of these private sector banks could stand out. So we have marginally increased some weight there. And we have been selectively adding in some of the savings related themes as well. Some of the life insurance companies and all which used to trade at fairly elevated valuations have had corrected a bit in the recent times. Some part of it is due to certain regulatory speculations, and the other part was primarily because of certain industry level competitive intensity going up, and that kind of leading to a pressure on margins. But our sense is, so even factoring all of these, those companies trade at reasonably good valuations, and therefore we have added some part there. And another pocket where we feel there is a scope for outperformance is IT. Primarily, it's not that the stocks are very cheap, but our sense is some of the earnings growth which the street is factoring in those names, especially some of the large cap names, has scope to kind of be better than the consensus estimate. And incrementally, when we speak to IT firms and with a key event behind us, our sense is some of the discretionary spends could come back.
Point. Just now, leave me with an expectation. Now, this is something that I ask all the fund managers who come onto this program. If you were to leave your investors and prospective investors with a message that will give them a sense on expectations, on setting their expectations in
valuations, and overall market returns have been fairly strong. So that kind of factors some bit of future earnings. But having said that, so compared to a couple of months back, the upside potential, if I were to look, has improved marginally, but it could be lower than the potential returns over the next year could be lower than what we saw as long-term historic average. So when I say long-term historic average, so I mean something what we could have earned in the last decade. So my advice to investors is to keep investing in a staggered approach, and that would ensure that so even if there were some kind of market volatility, so you would kind of earn reasonably good returns over the long term. So one of the key outcome of the disciplined process which we follow is, so the reason why we follow a very reasonably strict process of having a defined buy and sell limits is, at any point in time, if you take any of those stocks, that would have an absolute upside at every point in time on a 2-year forward basis. And the advantage of sitting on cash when you do not find stocks which those threshold returns is, even if you take a longer term returns, 3-year, 5-year returns, and if you keep investing in a staggered manner, your experience would be much better than the index. So compared to a point in time investment.
Absolutely.
So if you have a fairly strong respect for valuations and you follow that process in a disciplined fashion, so your experience over a longer period of time, be it SIP or staggered investment, would be reasonably good, irrespective of where the market stands. But of course, the recent past returns would have a bearing on what we could potentially earn in the coming year.
Certainly. George, thanks so much for taking the time for speaking to us on the Mutual Fund Show. Pleasure having you.
Thank you.
Now, I said at the start of the program that one part of the show has to do with what the fund manager is thinking, and the second part of the show should help you when you decide a strategy to set your own mutual fund portfolio. And I thought, what better way to get you a sense of that than to ask the expert how he constructs his own portfolio. So joining me in studio today is Kshitij Mahajan, the Managing Partner and Chief Executive Officer of Complete Wealth Solutions. First of all, Kshitij, thank you so much for joining me today, and pleasure having you in studio. And you've sent me some details.
Right.
I thought, and of course, it must be important to state where you stand on the risk scale,
right?
Because it's not a one-size-fit-all solution,
right?
But it'll give our viewers a good sense of how you construct your portfolio.
Right.
So let's start with that. What is your thinking when you start constructing your mutual fund portfolio?
So good afternoon, Alex, and good afternoon to all the viewers. So my view of while I start investing in mutual fund is that when I need these funds, So eventually you plan for a goal. If you don't have a goal with you, then maybe it's a doubler or a tripler. Maybe you like to move out. You think that money has doubled or tripled.
Yeah.
But when you have a goal, in front of you, then then things become much easier for you. Then you know that, okay, let's say 2030 or 2035, you don't need funds for that time. So you can plan things accordingly and you can choose your funds accordingly. Luckily, I'll say that because I was always a part of asset management company and then on the wealth side and on the capital market side. So because I understand equity little better vis-a-vis anybody who's starting in new. So, and I was sure that yes, this is a way how you can construct a portfolio and create a portfolio for you, which is inflation beating, and you can start small. I started my 100% allocation towards equity mutual funds only. That's how I started. So whatever portfolio I have today, it's all been constructed through SIP.
Got it.
It's all been constructed through SIP. And if you ask my goals, I have a daughter who's 10 years old. As we speak, so when I started, she was, let's say, because number of times I bought a house, at that time I have to liquidate some portfolio, but you can say that 7 years back I started building again, and at that time it was very clear I require funds when she'll turn 18.
Sure.
So I was having 15 years on my side. So when you have that type of time on your side, your risk appetite increases because you don't need fund in 5, 6, 7 years. And that's how you can see from my portfolio also that it's little skewed toward small cap side.
Let's pull that up while we're speaking to Kshitij, right? Because there are a few charts. Of course, he's not gone into the individual schemes, but we can talk about, like we normally do with Kshitij, the schemes that he likes. He's not necessarily going to tell you exactly what he invests in, but the category allocation is there. And we can pull up that first pie chart. It'll give you a sense of where he invests. So there is 12% in focused equity. There's 12.4% in large and mid cap. There is 6.6% in mid-cap. I'm curious about that, so I'm going to ask him about that in just a bit.
Right.
There's a substantial portion, a 30% odd in small cap. Micro cap has 7%. In sectoral and thematic, there's a sizable portion as well, about 24 odd percent. And international is 7.6. Let's start with that mid-cap allocation because that stood out to me, 6.6%. Why is it so less?
So, when you have a focus fund or large and mid-cap fund, there's a specific mid-cap allocation which you get through those categories also. And you see that small cap as a category, it's very high on the riskometer scale. People who are watching us, they should know that it's because my risk appetite is a little higher and my time horizon is a little long. So I have this allocation toward that small cap category. And then, when you have this, you can actually choose small or you can choose mid. So, I choose small cap funds on my portfolio side. So that's why the allocation towards small cap is little high, as other funds are giving allocation toward mid cap through category also.
Okay, what about the sectoral and thematic? Because
yes,
I'm guessing this is sectoral and thematic.
Yes, I want to talk about it because so this is a recent last 2 years edition that I started because as the country focus and maybe the government focus is stepping up on the manufacturing side, I added manufacturing funds to my portfolio.
Okay.
My belief is that manufacturing is no more a cyclical sector. It has become more like a evergreen sector, like what we used to talk about banking or FMCG sector.
Yes.
Having said that, banking is an evergreen sector. For the last 4 years, it's not done well.
Yeah.
So I have banking as a sectoral allocation also towards my portfolio because if your overall ecosystem of GDP will grow at 12%, I'm sure banking will grow at 15-16%. That's the backbone of any country. So I think that sector one, which will do well because of the country focus, we are talking about 25% contribution of GDP by 2030 from manufacturing. Second, because the underperformance is there in that sector, that's why I have added that sector. So these are the two sectors which is on the sectoral allocation where there is a heavy weight. No, banking, I agree with you. You get 25-26% allocation in most of the multi-cap and focus fund category funds. But as I don't have much allocation toward the focus category, I have chosen banking as a separate allocation for myself as a sector. And manufacturing, I think, is going to remain for long in my portfolio from here onwards also.
How much of all of this is active and how much is passive, Kshitij?
So my allocation only in international fund is passive. Everything else is active.
And why is that?
So I still feel that India has a long way to go before your passive will become much more better performing vis-a-vis active, because we are still undiscovered, and fund managers are doing a great job at their end. So I run my own PMS, as you know.
Of course.
So, but you'll be surprised, my 50% allocation is in mutual fund and 50% in my PMS.
Right.
So irrespective of that, we have our own PMS. I still like to have 5-6 portfolio manager managing my 50%.
Yeah.
And you come to the flavor also what they are doing at their end, how they are managing. I feel that we have a very good set of people who are managing the active show. And maybe last couple of years, you see many of the passive funds have done well, because there is not a broad-based rally in some of the scales. But yes, I feel that in a long way, for next at least 5 to 7 years, active will keep on doing better than
And
passive.
downside protection also exists. There.
Yes, downside protection also exists, because it's a pool. Fund manager can take a call. But in passive, you have to replicate, or let's say you mirror image the index only. That's what you have to do. But yes, as I don't understand US markets, that's why I have taken NASDAQ and S&P 500, both funds, 50-50%, and put in an index fund.
Okay. We'll come to incremental investments in just a bit, but I'm curious about your selection. Okay, without getting into absolute details of it, I'm just trying to get a sense of how many schemes you own. So, for example, you have 30% in your small cap portfolio. Obviously, you've tried to diversify there as well.
Two small cap funds are there, and I can take the name. One is SPI and one is Invesco. This is my holding. So, and there's no recommendation. These are my personal holdings.
Yes, which is why I thought it would be a good sense to. Why did you choose them? What was the thinking?
I think Srinivasan, who's the CIO also of SPI, who managed SPI small cap fund, I think the way the portfolio construct is, with the size what they are managing, they are doing a terrific job. Nippon has done really well.
Incredibly well.
Yeah, incredibly done. But I've been with them, with SPI for the last 4-5 years. So, funds are very different, the way they perform, underperform. Sometimes, let's say, if both of us are fund managers, sometimes your bets will play in a year, sometimes my bets will play. So, you can't keep on switching the lane because there is 1 year underperformance or drag vis-a-vis index. So you have to give time to a fund manager. And I think my purpose and my expectation from capital market is index fund 12, actively manage focus or multi-cap fund 13-14%, small fund, mid-cap fund 15-16%, large and mid-cap fund 15%, small cap fund 16-17%. That's what one should look at.
What are the standout choices that you have in your focus large and mid-cap Gary?
Focus is HDFC Focus, I can tell you. I have only one fund, and they have done the fund really well. And that's why if you see the performance also, which I sent you, and I was surprised that and Focus is last 2-year edition, small cap is for last 6-7 years. So you'll see that Focus is showing much better return, because last 2 years market has done well. So there is no comparison. And large and mid cap, I like Tata large and mid cap. Chandprakash Padhar is the guy who manages this portfolio, and I think the selection in terms of the way he maneuver during what sectors one has to pick, he's really active in that. So obviously last 1 year has not been that great, but I'm not worried about that. I'm here for the next 8-10 years, and you should not keep on looking at your portfolio. Believe me, I was not even remembering what all funds I'm investing into till the time you approached and said can you show me that what all things you are doing. Then I said, oh, I have this also.
I'm glad that you looked at. So, but very quickly, do you change? We have 30 seconds. Do you change the SIP quantum to adjust for markets?
Yes,
so how do you do that?
I do that. I just step up. I don't reduce. Come what may, if market falls, I just try to see, can I step up by 5,000, 6,000, or let's say 10,000, whatever amount I can step up with. I do that at my end. And obviously, it's like every time I just look at the portfolio, I just say that how I can just add more sugar to it to make it more sweet.
I'm glad. Thank you so much, Kshitij, for joining in. Pleasure speaking with you.
Likewise.
And hopefully this gave you a bit of a sense of how to construct your own portfolio. Let us know what you think in the number that flashes on your screen, and do stay tuned. This is NDTV Profit.
Day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
India is the third largest market, air travel market in the world. It's growing at 7% a year. It's increasingly important on the international stage as well. Clearly there's going to be plenty of opportunity for airlines, not just the incumbent ones. There is a period of consolidation. I think that same consolidation has been seen in decades earlier in North America and in Europe. It allows for professionalization, it allows for capital injection. Ultimately, it builds a profitable ecosystem that attracts new entrants to come in. It's just the phase of evolution. Air India has 120 aircraft with a business class product. It has 70 wide-body aircraft flying to the four corners of the world. It's committed to 470 aircraft plus aircraft that we're leasing in. So we're not afraid of competition. It will take various forms. But look, it's a growing market and there's a huge opportunity, and I'm sure that there's going to be more people want to partake of it.
When we spoke, I think a year or so back, we spoke about the potential new routes that Air India would be exploring. At that stage, you'd mentioned Australia, and I think recently also Air India has expressed a greater interest in Australia. You got into an agreement with Australia Tourism, as I understand it. What are some of the other exciting areas where Indian travelers may be traveling, perhaps even non-stop on your aircraft, or most likely non-stop on your aircraft?
So we've added 23 new destinations, nearly 100 new routes since privatization, and that's largely enabled by the 100 aircraft that we've added net to the group. And new destinations are going to be a function of receiving more aircraft. But we see opportunity nearly everywhere, North America, UK, Europe, Australasia, Asia, in time to come, Africa too, I'm sure, near Asia. That is the beauty of I think, the Indian opportunity, is Indians are traveling more. There's a huge diaspora. There's historically been an absence of direct links between India and the major cities in the world. And so our mission is to fill that space as quickly and as effectively as we can.
Just to wrap this up with a little clarification, when would the large majority of 777s and Dreamliners have been refurbished at the present rate of refurbishment, and when would you start acquiring new A350s in the interim period?
Well, we're in this hiatus period now of the aircraft that were available for rapid delivery, whether by lease or...
They've all been delivered.
They've all been delivered
and operating.
For the most part. For the most, about 14 more 737s to come.
Right.
The aircraft that come off the production line will be towards the end of 2025.
I see.
And then they come at a fairly rapid pace thereafter. So there is this period whereby we'll start the refit program, start the refresh program, but won't grow at a great rate. And so that's an opportunity for us to ensure, improvement in efficiency and consistency, and keep strengthening the customer proposition. But it's going to wait
2025 end, 2026
is
by the time
when the line fit aircraft start coming in.
Right.
And then the refitting of the aircraft starts in 2025. There are 40 wide-body aircraft
to
go through the system.
Yes, I know, it's a huge number, yeah.
We can't ground all 40 at the same time for obvious reasons, so it will take a couple of years.
Right. All right. Well, thank you very much, sir, for talking to us. And I appreciate the fact that, you take on these direct questions. And I look forward to the Air India journey. It is truly a fascinating challenge. Thank you very much indeed. Thank you. Thanks. Thank you.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspirational.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the
Hello and welcome. This is the Small and Mid-Cap Show. I am Agam Vakil, and in this show, we take you through the outlook for various businesses by talking to managements of these companies. Today, we have with us the Managing Director of Balaji Amines, D. Ram Reddy. Mr. Reddy, thank you for joining in and taking the time out to speaking to us here at NDTV Profit. Well, my first question is to do with the second quarter. We didn't have a chance to actually have a conversation around that. In the second quarter, what we have seen is a decline in volumes, a decline in revenue, but a considerable expansion in your operating margins. The first question has to do with your expectation and outlook when it comes to H2. What can you tell us about your view on what we can expect when it comes to your revenue, your volumes consequently, as well as operating margins going ahead?
See, the prices last 2-3 quarters were not stable. They were very low. Now we expect that there is some movement in the pricing and offtake of the material in the pharma and API and agro also. We have seen some movement. So there's a reason you could see some better margins. And as regards to volumes growth, we have done year-on-year basis about 6 to 7% if you see, and we aim it to about 10 to 12% for this total current financial year. And margins also, I think it should be between 18 to 22%, basing on the current trend. If something goes wrong, we cannot say, but as of now, yes, I can say it's everything on the track.
So 10 to 11% of volume growth that you're expecting for FY25. Mr. Reddy, I just wanted to understand with this volume, what is the target when it comes to revenue top line for FY25?
FY25 will be about 16 to 18 crores on the standalone basis. But you are well aware that we have many things in the pipeline for the expansions. Going forward in next 2 years, we will see more than 3,000 crores if the prices are stable, because the methylamine plant just commissioned, which is about 48,000 tons per annum plant is commissioned. And same way, dimethyl ether is another big product, which is about 100,000 tons, which is going to be commissioned by the end of the year or maybe first quarter of the next financial year. And the same, there is a product called N-methyl morpholine, there's isopropylamines. So these are all in the pipeline, the Balaji Amines. And even in the subsidiary, that is Balaji Specialty Chemicals, we could not do well because of the dumping and many other reasons. But there is a big expansions we have planned, as said earlier. There's about we have planned for 750 crores in the 2 phases. First phase will be about 300 to 400 crores, which we already started the land digging, which may take about exactly 12 months from this month. Maybe next December you will see at least 2 to 3 plants will be commissioning and starting the production in the unit 2, which are again very premium products like cyanide-based products. So looking into all these things, we aim that in the coming 2 years, we should touch about 2,800 to 3,000 crores revenue, and with about 18 to 20% EBITDA margin, should be in a position to maintain.
18 to 20% EBITDA margin with around 3,000 crores of revenue in next 2 years. Now, as you rightly said, so this was actually my second question, that you're doing a lot of capex when it comes to expansion. Now, what is the capex number that you have set in, and how you're gonna fund it?
See, for Balaji Amines, we will do.
Third big question that we're asking this evening: do we need more stringent cyber crime laws? And to answer all those questions and to tell us a bit more about this digital arrest scam, joining me on the broadcast this evening is Mr. Yashashvi Yadav. He's the Special IGP of the Maharashtra Cybercrime Department. Mr. Yadav, good evening. Thank you very much for joining us on the big story. To begin with, right, Mr. Yadav, to begin with, for all our viewers who are joining in, explain to us, how does this digital scam actually work, and how can one protect oneself from actually being scammed in this manner? Because the list of the number of people who have been held under digital arrest is long, and it's extremely alarming.
Yeah, I fully endorse the view that digital arrest is one of the sophisticated scams that is even scalping very well-educated people, even officers. But the premise is that there is nothing called digital arrest in law. There's no provision of digital arrest by any law enforcement agency, be it police, CBI, ED, or income tax, etc. So whoever says that you are under digital arrest means he's scamming you. So the moment he says that, please report his phone numbers, his details, his modus operandi to helpline numbers of your law enforcement agency. For example, in Maharashtra, it can be resorted to helpline number 1930 or 14407. So this is very important. Secondly, the kind of sophistication is amazing. It's almost incredible. There are police officers with exact names. In one of the digital arrests, my name was used, and uniforms are spick and span when the people come on video. Even courts are being replicated with visitors, with judges, lawyers, etc. So the person would definitely feel that there is an arrest warrant or there is a threat of arrest against him or her, and they don't ask for bribe. They just ask money to be deposited in an account as a surety. So the person thinks that this is actually authentic law enforcement action taking place, and parts with hard-earned money, which is definitely, and the only way to fight it is awareness. Like you have invited me to this program, similar kind of awareness drives should be undertaken. And once people are aware that digital arrest is just a kind of an artificial phenomenon created by these greedy scammers, I think the phenomenon will lose its steam.
All right. Now, what does one do if they feel that they are becoming a victim of this scam, and if you've lost your money? Because that is one of the primary concerns that is coming forward. And we've spoken to victims, and they seem to suggest that once the money is transferred out of their account, it is then transferred several times, and even the police at this point are unable to track it.
Yeah, there are 2-3 issues in this also. Number one, the make-believe is so real that the person parts with the money. Now, as soon as the victim realizes that he has lost the money, the first thing he should do is to dial 1930 number across the country. 1930 number is a financial helpline which blocks the accounts where the money is, it freezes the account where the money is transferred. So there is a possibility of money returning to the victim. It not only freezes the first layer of account, wherever the money goes, it freezes until and unless it is withdrawn. So it could be 3rd level, 4th level, even 10th level, where the money is going, the account will be frozen, and with a court order or with a law enforcement agency order, this money is reverted back to the account of the victim. For instance, this year, Maharashtra Cyber Department has returned more than 500 crore rupees to the gullible victims and they had heaved a sigh of relief. But again, this all depends on first few minutes. Earlier, it was one first golden hour. Now, I would say first few minutes, 10 to 15 minutes, you must report so that the accounts are frozen successfully. Secondly, please be aware. When we drive a car, we are aware of the traffic rules. Similarly, when we go on an information superhighway or internet, awareness is the buzzword. So that because every day new modus operandi of scamming is coming. Digital arrest is also now passé. Now virtual kidnapping cases are coming up.
All right. Also, Mr. Yadav, a final question to you. Do you think we need a more consolidated set of cybercrime laws? Because at this point, we seem to be playing catch up to scam